I heard this morning that the Brazilians were getting irritated with you.
Why is that?
No, I heard that Bolsonaro was on the lookout for you.
Yeah.
No, just someone who had, I think he's been to Brasilia, but most of his time was in Rio de Janeiro. And he was saying, that guy you do podcasts with from Brazil, he's pretty good. I said, yeah. So you better watch out. They're going to get him from the right.
Could be. Yeah, his son is going to be the candidate for the opposite party against Lula, and let's see what would happen.
What's his first name?
Is the guy?
Yeah,
the son.
The son.
I just forgot his. Let me just.
That's all right. Not important. I just wanted to.
I forgot his name, but it's his son, and he's gonna run against both Lula.
All right, so
let's see what would happen.
We're not learning anything here. It's just a chitter chat. You guys are pretty amazing. You're within 250,000 shares of 20 million. 19,754,385 shares of Railtown. It's unbelievable. It's really good. I congratulate all of you. This is your vision. This is your hard work. This is your courage. And it's your going against the, I guess the market, if you want to call it a market, but going against all those nattering nabobs of negativism that come into your head, either from other people or just natively. And you're going to be rewarded for it, I think. 19,754,385 shares is incredible. I've been trying to work on something, but, just phone calls and scheduling and getting people to get me information and all of that. And everything has its own timing, as Steve Martin might say. I've also been very frustrated on, and I had to address it today, on trying to, for 10 months I've been trying to get something done, and it looked like it was going to be yesterday. Now it's another week and a half for no reason at all. But that's life. The king is in the country, and I think that's a positive. I know there are people, many of you, who have experiences and therefore do not agree with my opinions, so I'm going to keep my opinions out of it. But what's coming is going to shock you. And if we're lucky, we'll go back to reasonably normal, and it'll leave everybody's mind, and we'll start talking about Kourtney Kardashian's latest boyfriend or something, if you're lucky. But even in that case, we're going to have to get through this year of, it looks like there's going to be starvation in the world, but we don't care about that. Those are brown people. Those aren't Americans. But there's going to be an inability, but it might affect Europe too. There's going to be an inability to plant pretty soon. And there's a war going on in the world's greatest breadbasket, the Ukraine. I don't know what we're thinking. It's almost as if we're not sane human beings. We're irrational and we're behaving in idiotic ways. But I'm not going to convince people who find this to be opinion, so I'm not going to try. But I thought what I'd do, and I haven't read this yet, I made this up. I did a lot of the entry, but I had the computer put it all together. And I thought what I would do today as I didn't sign in. Wow, we only have half an hour left. Let me just do that quickly. Okay, so fingers down. Railtown's actually down a penny. HLP's down. Xanadu's down. I saw that OpenAI missed their numbers, and that might explain some of it. I think the market, I still believe, despite the call it fundamental, despite the evidence on the ground, the real world, I still believe the market's going to have this blow off top. Hopefully it's 6 or 9 months from now, so we have plenty of time to rearrange our portfolios and get ready for what's coming. I just want you to know, as we go through the hardships ahead, that we stood with Israel. Just remember that. We were righteous. We stood with Israel when no one else would stand with the victimizers. That we treat them as if they're the victims. I don't know. To me, I don't know how you reconcile both, that they're both victims and they victimize, but you do. So I'll let you do it. You just be proud of that. That energy will get you through the hardship that's coming. But what I want to do is get your frame of mind and your thinking around the fact that I left it over here. The last 3 or 4 years of performance, 5 years, according to an interview I listened to the other day. I haven't confirmed it, but I wrote it down. The S&P 500 was up 24% in 2023. It was up 24%, unless I miswrote that, but something like that, in 2024. I don't know. They're both the same. And then up 16% in 2025. This year, it's already up 3%. And my guess is we can have a blow off where it goes up another 30% plus. But that's not normal. And it's out of whack. It's the masses of asses going in one direction when in fact they can turn into a fearful herd in the other direction very quickly. And what I get that we support Israel. Israel is exalted and can do no wrong. And therefore, anything that's happening over there is the fault of the victims. And if you call it out, you're opinionated, you're anti-Semitic, you're an asshole. All right, I got all that. So let's ignore that. Let's put that to one side. At least you might agree with me. When you shut down 20 to 25% of the world's oil, 30 to 35% of the world's natural gas, it might be 25%, 30 to 35% of its there, that was an important call, but I'm not going to take it. That's an important one. You wait all day for callbacks, and then finally they come. But 30 to 35% of the world's fertilizer and other petroleum products. This is going to be a disallocation that's going to wreck your lives unless you're prepared for it. And my goal here, there's a bit of a race against time, but I'm not so sure. I think we'll have enough time. But I want you to get that shift, or at least some of that thinking in process. Doesn't mean you have to do it with everything you own. We got to get ready. One of the things that we're going to miss, I am anyway, I thought I had an investor with me on that, is silver's about to triple, I think. It'll pull back in the correction. So I don't think we need to chase it with our Railtown money, because Railtown's about to go up 20 to 30 times. That's my judgment. And that's just the start. So, you can't be in everything. But miners are going to come back. Small companies like that are going to get funded. It's going to be an exciting time. So, I don't really want to ask I don't apologize for my views on what's going on, but I do ask for forbearance that I have shared my views. We'll try to set that aside, because just putting our fingers in our ear and thinking that simply because every other time in our lifetimes that the United States has acted like a know-it-all, powerful bully, it's always worked out in the end. It's not going to work this time. And unfortunately, you may call it opinion, but the world is aligned against us because of some things that I know that's opinion. I think we can change because we've stood for so much good in the world, and our institutions mostly are good. Our people are good for sure, and our ideals are good if we can stick to them. But there's going to be a transition period ahead, and the main thing that it's going to involve is the dollar is no longer going to be the price of oil. That's the main thing. Our bases in the Middle East, they're destroyed. You may call that opinion, but the evidence is they're destroyed. I suppose you could call it opinion that we're not going back, but we're not going to be able to go back. So the Middle East is now going to be under different adult supervision. Soviet, Red Chinese, maybe Pakistani, maybe Indian, although they got their own issues. But it's probably going to be a combination of Soviet and, Russian. We should be friends with Russia, but instead we've picked a war. And you got to ask why the war is going on. I know you can give me all your rah-rah rally around the flag reactions, but why is it really going on? Our banks are overextended. To keep in any closed system, to compound, and that's what the the green shades, British banking system, Dutch, Italian, and a little French, but mainly the British keeping ledgers, and everything goes up in value. I think there was a reason in the Bible, I can't quote where, it called for jubilees, and every 7 years you forgave each other's debts. You forgave your debtors. Forgive us. Anyway, in a closed system, things grow and grow and grow. And the people that own that wealth and have the beautiful second or third wives and have the big yachts and have the big bunkers and have the places to live in New Zealand, they don't want to lose that chance, this glorious concentration of wealth. So the banks, they're all bankers. The banks send us to war. And what isn't in the the Western financial system? $100 trillion worth of Russian assets. $100 trillion worth of Russian assets is not in the Western system. We're at war with them. The Ukraine, because Hillary lost an election. But what's another front? Iran. Anyway, we have to live with what's coming. We don't have to agree on why it's coming, but that it's coming, we have to prepare for. And it doesn't have to be scary. It just has to be, we do change some of our allocations and some of our habits, and we get prepared. The life of material excess, the almost unlimited ability to buy new things and throw away the old, I think that's going to come to an end. Anyway, let's move on. Railtown's 3138. We've got about 20 minutes to go. Let me see what the volume is. 3133 to 3207. It's 44,000 shares. And the last trade was 3,492 at 3138. It's an odd number. That could be a real buyer, but the seller almost certainly is counterfeit shares, my judgment. It also could be a signal. That odd number could be communication. Finger, I told you the other day, I thought the chart was looking like it might have one of those runs. It may do. It's got more volume, though, 159,000, 101 to 102. And obviously the heaviness, they're going to try to get it under $1. But I still stand by that chart. Very interesting. We'll see. I wouldn't take money away from Railtown and go chase it. But, you know, if you're trying to do something that you can watch every day, that might be interesting. Xanadu is down 67 cents at $28. ZJYL's up a penny at $2.29. I don't know how these come up. I guess I'm talking to you at different times. These stocks like ZJYL, which had a huge reverse split. So this number, I don't know what it is because I can't remember the split. I don't know what it is compared to what you guys used to have it for. But remember, these are all whales in there, and they can engineer, if it starts working, they can engineer squeezes. And those are three-card money. You can make some money. Or those are craps tables. You can make some money. But if you stay too long at the game, the chicks go play with someone else, and the music goes somewhere else, the drinks go somewhere else, and you're standing there looking down at the felt, wondering how you're going to pay for your hotel room. All right. Let me go through some of your comments. I saw one comment up here. Oh, Buckeye in Puerto Rico. Hello, Bill and RT crew. Hi, Buckeye. I'm going to try to come down to Puerto Rico, so I hope by that time you and we can communicate. I don't know when. I don't have the moolah, but it's one of the things on my mind is relocating to Puerto Rico by hook or crook. Maybe I'll find a mamamita or something. What do you call it? A mamaista? A mamacita? All right, Adela. I didn't reread my post. What I meant to express isn't 30% more stock. I think we're going to come to a point where Railtown, a better number would be 50% higher or 100% higher. We're going to come to a point where people will start buying Railtown at 3 times the price you're paying for it right now. That's human psychology. It is human psychology. So step up, buy it now while no one else is. You don't have any competitors while you're buying stock right now. And yes, the heaviness keeps it down. It's red. Yes, it's almost a year. Yes, in November when a gentleman and somebody I consider a friend said to me, when are you going to give up on Railtown? I couldn't do it. He said, I don't think you hear me. When are you going to give up on Railtown? It was around 42 cents, give or take 2 cents. And sure enough, within days, it broke down. Well, that's life. I'm reading this book, which I recommend. I read, there's a lot of books similar that you can pick up. But, when he got his start, he started a fund, and their idea back in the day was to do small cap stocks when no one else was doing it. And on their study of it, small cap was down 30% versus whatever complicated, graphing and metric they had. Well, guess what? For the next year or two, small cap got cheaper. It went down 40 to 50%. And they almost went out of business. Timing is a bear. But it doesn't mean you're wrong on what you see. You can't predict the timing. You can try, and I do, when asked, but it's really a fool's errand to try to get it exactly right. All right. So what I thought I'd talk about, I got to go through the comments first. Pat M. Mein Gott, how are you, Pat M? Fast Eddie, how do? To you too. Pat M bought 2,000. All right, Pat. All right, I got to write that down. Got to write that down. Good for you. Everybody's clapping. The cheer goes up to the rafters. That's a great position. That is a great position. Good for you, Pat. Ricky Brogan. Hi, William and RT crew. Donna M. Hello, everyone. Congratulations, Pat. I agree with Donna. Ward Richardson. Good afternoon, William RT crew. Amazing. Amazon today launched its own OpenClaw AI agent to grab their share of enterprise software market. RT has the enterprise grade solution for this very market. So let's think that through. Enterprise software is the target of Railtown, but it's not software, it's the AI, it's the agentic software. And OpenClaw, I'm at a loss to, my memory is not coming up with what exactly OpenClaw does, except that it grew very quickly, and it is about agentic agents. I think OpenClaw is helping agents talk to agents, but I could be wrong on that. But that's the big trend coming, is we go to the website, but in the future, you're going to have an agent do your work for you. It'll be yours. It'll be, you'll have a app, and you'll say, Donna will say, please keep track of the weather in Florida and the weather in Virginia, and map out a schedule of flights versus cost and whatever, motels or hotels or whatever. And you'll have an agent doing that. And you might give it permission to book those various things. I mean, that's a weak example, but that would be a use case that's coming, that people will have their own personal secretary or assistant. It'll spend money. You'll be spending, you'll have cash there that'll be spent, but it's agent to agent. Your little agent, it's not little, but you're small compared to the whole universe of agents. One agent goes in to all the websites and collects the data against other agents. I think that's where OpenClaw comes in, but I think Railtown still is on top of all that. And I don't have the various vocabulary and the various experiences to tell you exactly how. And I would submit to you that few people understand it. This is an evolving market and industry. But I believe Railtown's real-time ingestion back and forth using stored data with new data, and then controlling how agents behave, and governance, and tracking it for the regulators, tracking it for the auditors, etc. It's all Railtown. And as long as Railtown stays Switzerland, longer than Switzerland has, they can be on top of Amazon or on top of OpenClaw. That's my interpretation. Ward will correct me, I'm sure. But anyway, he says Railtown has the enterprise grade solution for this. And I think this is going to get bigger and bigger and bigger. Imagine billions of people, or 500 million, each having a digital wife, or a digital husband, or a digital aide de camp, an agent doing all this stuff. And Railtown will be, I don't think Railtown will get a slice of that. I think Railtown's on top of the entire thing. But that's my thesis, and that's about to either be proven correct or incorrect. If I'm wrong, what's the fallback position? Railtown gets 30% or 40% of the entire market, alongside of some others like Google ADK. We'll see. We'll find out. Jason Harbison, TELUS should have Q1 earnings May 8th. That's okay. We'll look out for that. Unfortunately, I'm not going to make that deadline personally, but I'm so happy. Maybe we'll be at 20 million shares by that time. Giuseppe, hi, William and everyone. Ward Richardson, Jason Harbison, yes, May 8th could be a catalyst for RT. We should soon find out. I agree with Ward. And, when I agree with him, that dilutes his story. When he agrees with me, that lifts me up. He knows what he's talking about. Giuseppe, I would take a buyout in the 5 to 15 and roll some funds into the Farrand Resources Fund in the next 3 to 6 months, rather than 25, 45 in a long-term time frame. All right, let me tell you what I'm trying to do, Giuseppe, and I was working on it today. What I'm trying to do, and I did a lot of work. I spent a week, 10 days, intense work, and then Google erased it all, so I'm trying to recreate it. They had a weird clause they didn't tell me about. I upgraded the service to the maximum. And apparently when you're, I forget what it was called, work or something like that. When you're in the top, it wasn't called professional, but it's this top service. You're treated as if you're a company, which was what I'm trying to create. And lawyers at Google erase everything after 3 days. I'm like, what? I'm like, I cursed a blue streak. But it's lawyers. So now I came down from my subscription to a lower one. And I'm trying to recreate it. But Giuseppe, what I would like to do is, I don't know the magic number, but there's 3 things that could happen with Railtown over the next, let's say over the next 90 days. One's extreme. 2 are extreme. And I guess I have to add a 4th just because it could be that way. One extreme is in the middle of this, we have a short squeeze. I do not want that to happen. However, if it does, we're going to have a strategy for acting on it. I give it a lot of thought. We're not there yet. I don't want to talk about it because I don't want people thinking it's going to happen, because it may not. Nor do I want them to think that any move up is a short squeeze, because we could just have a violent catch-up valuation in Railtown at any time that has nothing to do. But anyway, that's one extreme. Another extreme is that the company could be bought out. I personally think if Railtown were to be bought out, and what I mean by that is to accept a buyout, I don't know how long it would take to effect. In the next 90 days, I would think it would have to be at a bloody high price. I'm not sure 10 or 15 billion would do it. I think it would have to be at a massive price for the company to accept it. So, it could be $100 a share. It could be $200 a share. But those are extremes. I'm not saying those are high probability, but they're possible. The most likely thing that's going to happen over the next 30, 60, 90 days is the stock is going to catch up to Langchain's valuation, and it's going to go to $5.50 a share. And from there, it's going to go to 15 and maybe into the 20s. All on its own sum, as that rap song called it. And then the 4th thing we have to admit is we could continue to be in the doldrums for a while. I mean, no one can predict when that ends. But what I'd like to do, Giuseppe, is, and I'm going to do it. I'm setting it up. I don't have the dosh, but I'm going to establish it. I'm going to establish, I don't think I'm going to call it Farrand Resources, but I've already set up the companies. Like I called the gold company Agent Gold. I actually don't remember the name of the parent company. It's something like Agenic or Agent, or it might be Resources. It might be, anyway, I've set it up. But like I say, Google, I had, oh my gosh, I had so much work, and I was saving it. I put it all in the same chat, and it's all gone. So I have to try to remember. Anyway, I did establish the domain names. I believe I established the company, but frankly, with my apologies, I don't remember the exact details. So I'm working on building it back up, and I'll get there. But what I want to do is set up a, however it's recommended to me, I want to set up a, you know, a company where, and the reason I'm hesitating, there'll be daughter companies, there'll be specific investments, but it's exactly for what you're saying, for resource investments. I want to do natural resources, which is everything in the commodities space, but also oil and gas and everything in energy. And I want to do AI, those, but I want to have a broader mandate that have opportunities in other areas, but it includes physical metals and all of that. I want to set it up so that people could send money in, and I'll put my own assets in, and I won't operate. I will be completely aligned with the investors. I won't operate outside. For example, my thinking is if I'm able to source deals, subject to costs and, keeping the lights on, my idea would be if there's any, payment for that, I would put it in the company so everybody shares in it. Or, but I have to say, I would allow for my experience raising money for 20 some years, 25 years. It looks, whatever that is, you've got to chop it up with a lot of people, and you can't control all that. So you got to be, there has to be flexibility. You can't lock in. But anyway, my idea, Giuseppe, is to set up a clean, audited, arm's length banking structure, but also a brokerage account. Maybe Morgan Stanley, my old office, maybe, but I've got to get, they may say, no, we don't want to do it. Or maybe with one of the other brokers I know here in town at one of their firms, or with a online firm, such that, Giuseppe, if in the example you just gave, you could transfer shares instead of cash. You know what happens then? You do not take a taxable event. And then it would come in, again, I have to get legal advice, but I would think it would come in at the day the shares are received. It would be priced either at the closing or maybe an average of the opening, closing, and noon. Anyway, it'd be priced right then, and that'd be the percentage ownership. And then inside the company, I could hold it, but if something comes up and I sell it, the tax obligation is inside of the company, not to you. Now, I'm not an accountant. There's there's obligations to investors in these. There'll be a K1, but if I structure it properly, and if we're doing a lot of these investments, there will be tax loss carry forwards. So anyway, you're ahead of me, and I want to get it ready because if we have 20 million shares of Railtown and it goes to 25, Dan Borders, Frank Benedetto, Tony the Timid Tiger, all these guys are going to come to you as if they're the geniuses, and they're going to be salivating over that capital. I'm going to do my best to keep you from dissipating what you've won, if it happens, what you will have won at such brave and committed, and I think hard work. It's been hard to go through this, but if 20 million shares goes to your $25 number, that's $500 million. And if it goes higher, it's higher. But if I could somehow get somewhere between 5 to maybe 20% of that into a fund that we're all part of. Again, it's not about me, although I would insist on being in control, at least in the early stages, because otherwise I'm not willing to go through all the mistakes that I've seen others do and I've done, which I'm not going to do. Doesn't mean I'll be 100% right on everything, but anyway, that's my idea. So 20 million shares, if I got 25% of that, if I got 20% of that, 15% of that, to manage, I think, and then we would be our own well, I don't know what to call it, our own gathering, our own tribe, our own village, our own collective. And what we're investing, people could follow it. And anyway, that's my idea. It's not, I wasn't ready to pitch it to you, but I also would set up that it'll be one company, but then it'll be several daughter companies to keep the liabilities separate. It's how you protect from one thing blowing up and harming the whole thing. But I would also, one of the things I have in mind is trying to have a charitable side to it as well. E. Belanger, what do you think the next news would be? I mean, the real PR, not something like we will make a hackathon. I think that's a brilliant question. That's exactly, that narrows it specifically to what we are looking for. I can only give you my opinion. It's been a long time since I've been able to feel like I've had access to kind of scuttlebutt. Not that I don't think I don't know, still there. Obviously, if I did, my timing would be better. But I think for a while there, particularly early on, I felt like I was getting a pretty good idea of the story, the themes of the story as it was being viewed by the company. But I'm kind of out of touch, I think, with that right now. And I think it's okay because we know the story. I don't need my handheld. It's nice, of course, if it's the right person, but I don't need that my handheld. And I don't need to check every step of the way because a lot of the information's out there. But anyway, Eric, what I think is going to be the piece of news that makes this rock and roll is TELUS. Now, it doesn't have to happen right away. Something, there can be let's say an event or a release, and it could take days or weeks before everyone goes, wow, and catches on. So I'm not saying that any one particular piece of news, the stock is all of a sudden going to stop trading and open up $5. I'm not saying that at all. But what I think you need to see is a series of events, rolling events, which will be started by the TELUS. I think it'll be TELUS. But at this point, maybe Railtown's talking to, Elon Musk or talking to Germany or talking to Korea. I don't know. It could be something else. But in my opinion, it's TELUS. Everything comes down to TELUS. So what I think needs to happen, more than just a Railtown press release, I think TELUS has to come out, pull the lever on that data center, lower the drawbridge, lift the gate, and invite all the village into the courtyard and throw a big party. I think TELUS needs to announce to the listening world that our Rimouski data center, the first of its kind AI sovereign factory, is open for massive business, not just 4 or 5 accounts, everybody. And we're going to start transferring our existing clientele from other data centers here. We're going to start campaigning for other business in North America to come here through this data center. And what I expect, TELUS may not say anything about Railtown. It doesn't matter. What I expect is analysts will start studying, well, how much revenue is this for TELUS Digital? How much revenue? What's the growth? What are the components of this revenue? It might be that Fire XI. It might be, some other bloody TELUS created product. But inside of it, they may say, all right, they're going to get revenue because of the NVIDIA chips. This should help NVIDIA. They're going to be working with, I don't know, I'm going to guess Cohere because it's Canadian. But let's say they're working with Anthropic. So this could be a good deal for Anthropic. Now, who else is involved here? And they'll go through it all. The AIP network will come over and that might enter into it. But my contention is that Railtown does have an arrangement. It's been alluded to, it's been announced, it's been discussed publicly. I think Railtown has the relationship on top of the TELUS stack that makes the user's experience excellent. And I think whether or not it's announced, analysts will see, aha, what's this funny little creature? What's this Railtown? What the hell? And once they see, we don't know, but once they see the revenue sharing arrangement, once they see the power of the Railtown end-to-end platform, I think that becomes a proof of concept. Not only does it become visible revenue growth for Railtown, it becomes a proof of concept. So first you get, this is my belief, I could be wrong. First you get TELUS coming out and saying, we're open. Yes, we've been open for business since July, but we're really turning on the promotional efforts to bring business into this Rimouski. And this is our template for our own sovereign stack that we want to replicate around the world. My opinion is TELUS is turning into an AI company. But in that, two things happen. One is what I just described. Analysts and institutions and the hyperscalers, they all start studying what's under the hood. That's great for us. But the other side is that the blanket on news gets lifted. So all of a sudden, the restriction on whales buying and institutions buying who know the story, who are insiders, who have access to material, non-public information, in theory, that information is now public. Enough of it is anyway. So it brings in buying. So those are kind of the 2 or 3 things that happen right away. Then I would expect, as the proof of concept occurs, more quickly than we can even process it, I think inside of the smart brains at research firms, smart brains at venture capital firms and private equity firms and mutual funds, and at wealth advisors, they're going to have analysts that go, my gosh, we need to fund this, or we need to own this. And, several of them are going to publish, make recommendations, get their clients to buy Railtown. That's my opinion, with the proof of concept, because it's going to be easy then. It's not difficult. The arithmetic's, that's the capacity. That's the size of the market. Railtown could grow to that big. There's this many shares, and it's 100% margin, and it's proven at the TELUS data center, so it could be replicable. There's 12,000 data centers in the world. If Railtown got 12 of those data centers, we could extrapolate this to $1.5 billion in revenue in 3 to 5 years. That's big. The other thing is analysts inside of competitors, analysts inside of hyperscalers, analysts inside of other AI type companies, quantum computing, robotics, Tesla, Amazon, you know all the names, IBM. I think they're going to start looking at it, and then that decision tree splits in two. There's going to be those that want to partner up with Railtown, and because of the presence of Mike Blackberry, I think that'll take the form of revenue deals, license sharing or profit sharing, whatever deals. The other side of it, I think you'll see offers to buy the company. But I've seen this before in life. You've seen it in your own lives, where someone you're working with all of a sudden they shoot way the hell up. All you need is one thing to go right, and then everything goes right. And I think the one thing that's going to go well here is the proof of concept at TELUS. Now, core to my belief, and I still stand by it, is that Railtown was the first, is still first in class, and Railtown is critical to the success, particularly if it stays neutral, to the success of all manner of sovereign AI, of robotics, of real-time processing for, everything from defense to civilian transport, and in medical. I think Railtown has, perhaps without expecting it, but I think Railtown is sitting at the intersection. Railtown is sitting on the precipice of just a gigantic market ahead. And right now, no one's thinking that way. You are, Ward is, and 20 million shares are, but most people aren't. And you can buy the shares now without competition. But once those ideas come through, there's going to be a lot of competition for buying these shares. And I think, ironically, there'll be fewer shares available because most of the shares we're buying don't exist. But they're an obligation of Wall Street, so don't get scared of that. So anyway, long answer I just gave. Short answer, TELUS. Short answer is TELUS. Pat M, nice position. T. Alex, I forgot which one. Oh, yeah, the 222. It's awesome. T. Alex, hi, everyone. Hello. Ricky Brogan, William on LinkedIn. On LinkedIn, AI Partners reposted Dr. Tom Corr's post. Some kind of event Corey will be speaking. Yeah, that's Thursday. That's the Discovery X. I think it's Discovery. Detail X. Descript X. I think it's Discovery X. Data X. Anyway, it's Wednesday, Thursday, and Corey is, everyone's talking about him speaking. I think it's going to be important that he's there. And I think it's going to be important that Railtown's name gets out there. But he's technically moderating a panel. And he's very good. He's a gentleman. He's not egotistical that I can tell. So I have a feeling as he moderates, it's going to be more about each of the people participating than it is about himself. However, it's a huge breakthrough. But I don't think he's going to come up and say, hey, Railtown's this and that. But the story will get out. It's the beginning of getting the story out. T. Alex, Railtown AI Technologies is a key player in the ecosystem surrounding the TELUS Sovereign AI Factory and the related L-Spark initiatives. Is that Tony Spark? Yeah, Tony Stark. Tony Stark, Iron Man. You're right, T. Alex. Pat M, thanks, Donna and Eric. Ricky Brogan, TD Securities upgrades TELUS from hold to buy. Toronto Dominion was the banker on the IPO for, and I think they were one of the investors prior to that. I think they had investors sell into the IPO for Constellation Software. that OMERS and it raised, I think, the majority or all of the 25 million. That's Mike Norbrega. That's John Ruffalo. So Toronto Dominion, I'm going to assume here, is drawn to the AI and the revenue story of software that TELUS is redirecting to. And I guess what I want to say is I wouldn't be surprised, not at 30 cents, but maybe at $5 or $7 or $8 or $10. I wouldn't be surprised that Toronto Dominion follows Railtown. Pat M. UAE is leaving OPEC. That is an interesting move. I saw that. I didn't read any of it. There's a lot of there's a lot of dynamics that go on in OPEC. And I think with the possible exception of Libya, and possible exception of Iraq, although I think Iraq might be at its limit right now. I don't know how much their fields were damaged by the previous wars. And anyway, those two exceptions. And then there's OPEC plus, Russia in particular. I don't think any of the OPEC nations really have excess supply other than the UAE. But I saw the UAE's already up at a pretty high number now. They've essentially doubled their per day production over the last, I don't know, decade, 15 years. But I think the UAE has plenty of oil and could grow their production, but maybe they already have by doubling it. But anyway, I think the UAE probably does not want to enter into any restrictions that OPEC might have. I also think the UAE and Saudi Arabia both have decisions about their relationships with the United States. I know it's opinion, apologies, but if the United States cannot have bases in the Middle East, and if the United States sides with Israel and Israel attacks all of her neighbors at will, and Israel has nuclear weapons, the royal families have to say, well, are we safe? And I'm sure negotiations go on behind the scenes. And my opinion is Mossad threatens everybody and offs people at will, possibly all the way back to JFK. But that's my opinion. We can stay away from my opinion. So I don't know what their motive would be. I think the UAE deserves to have, and Oman, they each deserve to share in the control of the Strait of Hormuz. And maybe they separate it away so they can have a separate policy. I make no mistake about it. Again, I guess it's my opinion. Other people know, they have experience abroad and they know. I don't know. But listening to a lot of analysis, it's my conclusion that Iran is going to control the flow of oil through the Strait of Hormuz. for a long, long time. But I think it would only be fair that the UAE and Oman participate because they're the other side of the strait. Maybe there's some negotiation going on there. But the big one I think about, all you need is one of those two countries, the UAE or Saudi Arabia, to announce that, and they're already doing it. Saudi's already doing it. Saudi Arabia is already accepting gold as payment for oil. They just do it in warehouses in Riyadh, I think. China has gold in one warehouse, Saudi Arabia in the other, and they shift it back and forth depending on needs be. But if those countries announce that they separate the price of oil from the dollar, of course, it's my opinion that the reason why is because of our fealty to this despicable group of men and some women who lead a disgruntled country who doesn't give a shit about us. But we suck up to them. And we put it all on the line, but it, that gets into opinion. It might be just for that UAE is separated. Maybe the UAE wants to continue to sell oil in dollars, and OPEC wants to flirt with the alternatives, or vice versa. I don't know. I don't know why they do it. But the UAE is a powerful oil exporting nation, and I don't know. I guess I'll wait till some analyst comes up with a reason. But those are my ideas, that it's about security. It's about maybe making separate arrangements than OPEC for security, but it's also about the pricing of oil. And it might have something to do with making an agreement to be a recipient of the Ayatollah's toll going through the Strait of Hormuz. I don't know. Ricky Brogan, plus Telus came out with a bullishness as well. Look, Telus is this. It's a high yield telecom. A Merrill Lynch guy is coming in. Now he may just be closing his eyes, and he's going to cut, and he's going to act like a private equity guy, destroy Southwest Airlines, destroy needless markup, destroy Red Lobster. You've seen it. When private equity comes in, there's no excuse for them. They're not smarter than anybody else. So their only alternative is to destroy, suck out profits and revenue. So it might be that this guy taking over is going to do that. I don't think so. I think that the previous CEO has set TELUS on a path. They see AI. They see the Canadian intent to spend Canadian energy and Canadian universities and Canadian intellectual property, Canadian banking, Canadian data centers, Canadian, to create a superpower in AI and energy, in the next industrial iteration of the world. So I think, my opinion, I don't know him, but I think this Merrill Lynch guy is going to further that. So the question when you have high yield, high dividend is, oh my gosh, something's wrong and they're going to cut the dividend. I think it's different. He might cut the dividend. It's possible, but I think it's different. I think you're going to see when TELUS opens this Rimouski data center and Kamloops is behind it. And for example, my projection, Railtown starts showing that it's going to do $250 million in revenue, let's say in 2008/2029, 2028, 2029. And then from then on, and it's 100% margin. Well, that'd pay a lot of dividend if TELUS bought out Railtown. So I think the avenue is going to be that this guy, I forget his name, is going to embrace Entwistle's vision and others of AI for TELUS. And I think the dividend is going to get paid. And I think cash flows are going to grow. And I think Canada's decade-long or longer bet on its own intellectual powers, its own intellectual property, its massive excess of energy, and its AI focus is going to pay off magnificently. And TELUS is going to be a beneficiary, and so is Railtown. Alex, Railtown AI not listed as a participant in the inaugural cohort of the TELUS Sovereign AI Accelerator. It maintains a separate, broader strategic collaboration with TELUS. Well, I don't know, Alex. Frankly, I may have heard of it before, but this, my dim-witted brain, is the first time I'm seeing TELUS Sovereign AI Accelerator. I can think of two reasons why Railtown wouldn't be included. Number one, Railtown is neutral. Railtown is Switzerland. Railtown's great growth prospects is in maintaining its neutrality. So if it did align with TELUS, possibly, that would preclude it from getting a contract with Bell Canada or with Rogers Communications. So that's one idea that pops in my head. The other idea is it might be in the hands of the regulators or in the hands of attorneys or in both to make sure that whatever arrangement is under this umbrella of TELUS Sovereign AI Accelerator is agreed, documented, and approved. It might be something like that. I don't think it's a negative. Again, large investors and opportunistic investors, and in fact, the hyperscalers, et cetera, who are out on the scout for companies to acquire, they'll look under the hood. They'll find Railtown. They will find Railtown. Let's just see where the closings are. Finger closed, I guess, at 102. Railtown closed at 31.2. Zigil closed at 230. I guess Xanadu looks like it's trading in the after hours down 24 cents at $27.46. And help me if you can, I'm feeling down. It closed, I guess, at 82 cents. Bob's your uncle. Hello, everyone. Snagged. Woo! Bob's your uncle is going to be Bob's your billionaire friend. Bob's your billionaire next door. It's going to be Bob's your billionaire. Good job, Bob. I'm starting to feel very insignificant in my own channel. My audience is going to be My audience is going to be bloody rich. Bloody rich, mate. It's going to be a bloody seabird flavor. Good for you, Bob. Bravo. Bravo. All of you guys are amazing. Buckeye and PR, come on. Pat M, you're talking to, I assume you're saying, come on down. Pat M, way to go, Bobs. Ricky Brogan, Uniserve with news as well. Uniserve. And of course, I screw it up. I can't even type. There we go. Uniserve stock, I'll say stock. God, it's a 45-cent stock. Poor little guy. It's being crushed by the shorts. All right, what's the news? Yeah, partial conversion of debt, debenture. I'm scared to look, but I have a feeling that is one shitty financing. And I bet that lead director comes from the financing firm. And they changed the chief executive officer. Should I look? All right, I'll look. They issued shares at 45 cents in settlement of 202,000 of the remaining. See, they signed a toxic deal. 650,000 convertible debenture under the cyclone. They got a toxic deal going here. Brad Scharf is going to be lead director. Oh, he's already been there. Sounds like he might, on first blush, it might be good that he's there. I don't know. I'll have to look, Ricky. I don't want to get buried in Uniserve. It's a side. Their capitalization table is a side issue. I'm not. Maybe it's a good stock to buy. Maybe it isn't. I see red flags that they. Any stock on the junior markets in the United States and in Canada get destroyed. If you need capital, they're going to destroy you. Like paranoia, they will destroy you. So it's not worth studying it. We've got the gem. We've got the diamond. We've got the nugget of gold. We don't have to analyze other companies right now. And I don't think it'll affect Uniserve's business. I just think it might affect what its shareholders get. I don't want to get distracted by it, if you don't mind right now. Bob S. Thanks, Pat. Bob S. Got my average. There you go. That's exactly right. When you listen to the rule of thumbs and the bumper sticker slogans for investing, they'll say never average down, cut your losses. But I think they're wrong. And what you've done, Bob, and other people here have done, is you've taken advantage of the weakness, like you say, to average your price lower, to average down. I personally think it's brilliant. I also think it's a sign of a advanced investor. That's my opinion. Others will disagree. But it shows that you are, basically it shows that you're confident in the story, you believe the stock's mispriced, and you're taking advantage of that situation. And it's in essence, after the fact, of course, but in essence, it's dollar cost averaging. I mean, everyone agrees that's a good strategy. You set out to buy a stock, you break it into, say, 10 parts, and you do it over, 10 weeks, dollar cost averaging, and you get a blended price. But I think what you did is equally savvy and intelligent. And, having said that, I think in the next, I don't know, 90 days to 9 months, I think anything from 35 cents to $1, $1.50, it's all going to look cheap. But it's brilliant, Bob. If I'm right, and the various catalysts cause an aha moment, and enough investors of all stripes with wherewithal just do the comparison with the other valuations. I mean, to go to $3.50 a share, Bob, on your rather impressive position, you're going to have 10x. And if it goes to $7, you're going to have 20x. And my gosh, if from there it goes to 14, well, I'll let you figure it out. But those are just tremendous returns. Good for you. Adele App says, Bob, nice job. You are killing it and loving it. Would you believe 1 guard and 1 German Shepherd? Ricky Brogan, congratulations, Pat M. Ricky Brogan, hello, Donna. Ward Richardson, are you 100? Sorry, William. Ward says, William, you are 100% correct on the agent to agent. Maxwell Smart here. So I get some things. Out of my ancient brain. Good. Thank you, Ward. CJ Yukon. Hey, you guys, Railtown is on sale today. There you go. Bob's your uncle. I agree, CJ Yukon. Too good to pass up. I agree, and I'm really proud of all of you. Donna used to be the, what do you call it? The touchstone, or the, the measuring mark, the benchmark. But I don't know. We might have to increase the benchmark. Now, I think everybody's position is tremendous. CJ Yukon, RT priced like a private company in the angle round of private equity would play. Angel round. Look, private equity is a con job. It's a bunch of people nodding and winking at each other, and they cover their delicate asses with analysis and reports and maybe professional outside third-party opinions. But in essence, Wall Street now controls capital formation. They've destroyed the over-the-counter markets. They've destroyed NASDAQ, and they've put a worthless woman in charge. She works for them. They put a worthless guy in charge of the over-the-counter. He works for them. And so the only way to go from soups to nuts is for 1 or 2 of these puppet masters to anoint you. They anoint who's running Facebook? Zuckerberg. They anoint him. And some cases, the CIA comes in, and it's all coordinated. But real price discovery just does not exist. So when you get a group, I don't remember all the names, but I remember some of them: Sequoia, IVF, Benchmark, and there's 8 more. When they get together, they each have a deal. Hey, can I take you to dinner? I'm working on a new deal. Sure, Beverly. I'll be glad to meet you. Let's set it up for when I'm in town. I'm going to be there in 8 days. Which night? Great. So there's a dinner for Beverly to pitch. I don't know, Cohere, and in comes, let's say, Donald. Donald sits and listens, and then at the end he says, I'm working on something. I'm working on this company, Langchain. We'd love to have you in with us. We've already got boom, 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 boom. Well, all right. Send what you have over. It's late. I've got to get back to one of my boyfriends, but send it over and we'll consider it. And that's how it works. And then and they cross-pollinate everything. So the valuation that was given to Langchain in the early rounds was created by maybe friends and family, but these early VC glomming on, well, they get it all glossy. They know the idea of chains of data that are pre-created, and they start to visualize where it can go in the story. But they say, hey, we'll get 100 million, 125 million for you. And then they give them the walking papers. Go hire engineers. Make Langchain bigger and better. We're going to do the propaganda. We're going to get the stories out. We're going to have articles in every business magazine, if people still read those. We're going to get you on every website, and everybody's going to be talking about Langchain, and Langchain is going to be the gold standard. And because of that, we're going to price this at 1.25 billion. I bet it's already worth 3 billion. But do you see what I mean? They use all the levers of awareness, the levers of banking, the levers of getting each other to invest, and they tell the same story to each other, and they all climb up the same metrics. They all get comfortable with new definitions, so everyone that walks in the room goes, what are they saying? They must be smart. But the valuation is created out of their ass. And the metrics are created. So you got to have that as a caution. Their goal is to increase the assets they have under management, and they're going to charge for that every year, and they're going to charge for the profit depending on how the contract's written. But they also can borrow against it and get involved in other deals. And then they're going to take that whole thing and they're going to offload Langchain at $50 or $60 billion to the hungriest of the hyperscalers, probably Zuckerberg. He blew 70 billion on Meta. And then they have a huge payday. And then they can sprinkle that around to their buddies. And the whole idea is to take it from inception, keep it in private equity, and then dump it into your retirement accounts or get one of the hyperscalers to buy it. That's not real price discovery. On the other hand, it's the only valuation metric out there right now. It's the only one. So you are correct, Ricky, that, and it's one of my theses. I feel like I have to wash my hands every time I say theses. It's one of my theses of this investment is that institutional investors and large investor pools are going to ask their buddies over at Sequoia, hey, can you send me the latest deck on and your latest valuation model on LangChain? Oh yeah, sure. It's all privileged. And then they'll bring it in and they'll compare it and they'll set up their models for Railtown. And I think because they're all covering each other's ass, because the private equity is surrounded with all these big names and they must be smarter, the portfolio manager can put that evidence in her file and she can start to build a position in Railtown based on that metric. And I think that's going to happen. But don't believe that private equity knows what the F they're doing. They're greedy. They start early. They claim it's like a number of the things I've told you about, but it's happening in oil and gas already. They come in and they claim the first 10 to 50x, the first 100x, and then they dump 8% returns on the overall market because they're so genius. But the reason they're genius is the over-the-counter market doesn't work anymore. It's been destroyed. And anybody like maybe Uniserv that goes to the junior markets, even though they have a good story, they're getting pummeled. So Wall Street has made sure that the alternative doesn't work. And the only metric is these arrogant twits. I've worked with them. I've been in rooms with them. I've sat there and felt like an idiot around them. But they just all preen and, I mean, the arrogant, they're insufferable. Many of them are insufferable. But they're not. They work in their own comfortable lane, I guess, and they're not any smarter than you are. They just have the advantage of access to capital. And it's each other's capital. But anyway, Ricky, I'm not criticizing you. I do agree with your thesis, but I just caution that private equity can get out of whack too. But if I had to choose between last year's valuation of LangChain by those people who, remember, can act, they are allowed to act on material non-public information. And they have access to that and the size of the market, and they have huge resources in terms of research, and they pay for services. And they're the ones on the vanguard of where all the Wall Street capital's going. If I had to choose between last year's valuation of LangChain and today's valuation of Railtown, all day long, I'd pick LangChain all day long. And that's still low. Michelle, Michael Leshaz, Michael L. Leshaz, William. Hi, Michael. I know there's probably more coming. Ricky Brogan, what I like about RT Air's never been, it's never been a $29, $25 stock. So it doesn't have folks waiting to break even and sell. True enough. It's a good observation. Ricky Brogan, another reason, and there are many reasons, is that it's never been high enough for fund managers to buy in before, you mean, and they will buy. Yes, I think that's what you mean. Richard K., can we call you the Gary Gensler of the Farron Fund? Well, I would prefer you didn't call me Gary Gensler. I don't think I'm anything like him. I watched him in action in Congress, and I even shook his hand, and I wanted to go wash my hands afterward. Ugh. He sucks up to everybody, and no, I'd prefer you didn't call me Gary Gensler. Jason Harbison, talked to two of my Canadian colleagues about Railtown. They were interested and were going to buy in. Colleagues, you must mean. Two of my Canadian colleagues. Good for that. Ward Richardson, I don't know about you all, but I'm ready for a major global licensing deal soon. Ah, that's interesting. That's interesting. That's the correct word, I think, instead of revenue sharing. But to follow on that, Ward, I think that's very logical. If Railtown is going to stay neutral, and if they're going to grow rapidly so that somebody else doesn't, claim the space, even though it's a lesser product, they're going to have to leverage their growth, just like BlackBerry did, by selling their software, which is intellectual property, and it doesn't cost more to do it worldwide. So I think you're right. Bob S., I'm also ready, Ward. All right, I have to excuse myself quickly because it's not for me, but there's a package out front. I'll be right back. All right, let me just tell them it's in. All right. I agree with you, Ward. So proof of concept leads to everything in your scenario, and I happen to agree with it. Jason Harbison, I told two of my Canadian colleagues about the Railtown story and the connection to BlackBerry. They're both going to put some money in. Well, maybe they'll get us to 20. Bob S., I recently received the AIP monthly update. All good news with them. Yeah, and I think that's where Dr. Tom Core shines. Jason Harbison, I talked to my brother-in-law into getting some dollars into Railtown. Should be buying in Friday. Excellent. Maybe it'll get us to 20 million. Bob S., strong rail engine, Ward Richardson says. A stackathon rumble is coming our way. I like that. Will under down. Oh, I remember your puppy dog. Hey, William, it's been some time since I've been on this chat. I've been getting killed in the market with ham stocks. I'm thinking of taking the 130,000 I have left and going all in on rail. I wouldn't, let me talk about that. I don't know how much you've lost, Will. And I do caution, if one of the stocks that you're in is Finger, I would do it. I would switch. But I do caution that Finger looks like, to me, it seems like every year, I'm trying to think if it did it last, yeah, it did it last year. It seems like every year Finger has a run. It gets all the way down and then it has a run. And I caution that that might happen. But I think that's catch as catch can. But it is my call right now. I think looking at that chart, I think Finger might have an interesting trade in it, but it's a trade. And I want to get away from those trades. Number one, just because it happens, there's no guarantee that you're going to trade it correctly. I'll just use myself as an example. I lost a lot of money in Finger when I did that movie, but I also earlier, I didn't sell Finger when it was up at, the stock. So I got caught up. It's so hard to sell when everyone is excited. It's so hard. So, but let me just go through that. I would do it, William. I'd do it tomorrow. I mean, I wish I had money, I'd do it. But I wouldn't go for 31 cents. I wouldn't do it. Now, if you follow my advice and it turns out Railtown goes down to 31 cents and you might have saved, a quarter of a penny, well, then you're going to get mad at me later on. But the stock looks like it closed at 31.33. Let's just use that number. But I would, whatever it is, I would pay it. That's how I would do it. But you can do it over a series of days. But there's going to come a time, Will, and that's a Waylon Jennings song. There's going to come a time, Lord, and I can't remember the rest of it. There'll be a time, Lord. Anyway, I used to remember every song. I would rather own the stock at 32 cents than miss it trying to get it at 31. So that's on what you suggest here. I would just buy it. But I don't know which ham stocks you're talking about, but I can guess some of them. And in fairness to ham, we all had chances to trade out of these stocks at a profit. We did. I feel like I'm missing some. I assume it's these kind of stocks. I just caution, I would do it. I would sell this, take my losses, but this might have a rally. And so that's based on the chart I'm looking at. But anyway, but Railtown's going to have a rally. So, it's not like you have a choice of catching both at this point. I think Railtown probably isn't going to do anything in April. Is that a safe call? But May be May. But it's like, what makes a herd of cattle stampede? What makes an avalanche roll? What makes a girl fall in love? What makes everyone on earth get tattoos? What is the tipping point, as Malcolm Gladwell would ask? You don't know. But anyway, if it's these kind of stocks, I'd sell them. I would, what I would do at first, Will, I don't know how much money you lost, but I'm going to pick a number. I'll say that you lost $400,000. I have no idea if that's the right number, but let's say you lost $400,000. And you have 130,000 left, and it's not all in finger. It's spread out. What I would do is put all of the 130,000 in Railtown. That goes against what Tony the Tigger is going to tell you. You got to be diversified. Well, it depends on your definition. I think all high-risk stocks, all piece of shit stocks, and speculative stocks are all the same bucket. And the only company, I put Railtown as speculative, the others as high risk and even shit. But speculative, you got to acknowledge, has volatility and risk. But speculative is higher grade than that. Now, it doesn't mean that one or two of those can work. They can. But the confidence, the probability is low. Now, if one does, when you look backwards, you're going to say, hey, it worked. I should have done it. But I'll speak in a second. I'll compare it to Finger. The other ones, all of those stocks, including Finger, have a lot of cross-pollination of investors involved, a lot of whales involved who lost a lot of money. And whales have an ability to make things happen. So they possibly, and again, it's a long shot. It is a bloody gambler's long shot. It's a loser standing at the table, casting the dice one more time. It's icky. It's an icky feeling. But the fact is that they could cause, if they chose one of those stocks or three of them, it's possible, if everything lines up correctly, they could create a squeeze by breaking the law on the long side. Which I'm all for, because the regulators don't penalize the shorts for breaking the law. It's a wild west. But even if one of those works and you look back and you go, oh, I could have done that, that's not fair to yourself. You don't know how you would trade it. We all had opportunities to trade, let's just call them ham stocks. If we got in early, we had a chance to make 2x, 5x, even 10x. And most of us didn't take it, including me. So you don't know how your discipline would be. In the case of Railtown, I think 20x is a slam dunk before you get out of the gate. I think the value of Railtown will go from 35 cents to 3.50 as you're walking your horse to the gate. And once all the horses are in the gate, I think it's worth $6, $7, $8. And as the race breaks, hell, it could go to 80. But let's worry about that 80 number later on. So anyway, you've got $130,000. in all these in all these stocks? Well, one thing is, if you sell them and don't buy any of them back for 31 days, you establish that loss or part of that loss, which has value, by the way. It has value to you. They might be long-term or short-term, and they match off against each other. You waste your long-term when you match it against your short-term, or the other way around, I guess. But they have value. If it's all matched against long-term, it probably saves you 25% on your taxes, at least. So it saves you 125 grand on your taxes. So establishing the loss matters. But I want to show you something about this 130,000 right now. Let's say a quarter, let's say half of that is in finger motion right now. So if finger motion works for a trade, which I would suggest only you know, will you be paying attention before the market opens? Will your heart go pitter patter and your fingers turn to mush and you won't write the ticket to sell? Only you can be honest. But if half of that is in finger motion, that means 60,000 shares of finger motion, I think. I want to show you, let's just remember that for a second from now. So now, if you have 130 grand and you're able to get into Railtown at, let's say, 35 cents. I don't know why this doesn't work. I got to get a better calculator. I guess it's all the zeros. All right, let me use my other calculator. $130,000. I wish I had this. Man, I wish I had this. I just don't. Let's say you get it at 35. So you're able to buy 371,400 shares. There's a bunch. You could buy a little bit more, but I'm leaving that off. Of Railtown. Let's call it, because I'm using a higher price than you'll probably get, let's just call it 375,000 for a round number. Man, Will, can I just tell you what a great position you'd be in? Now, that's what you would be. Let's say, in my example, you've lost 400,000. You sell everything. You put 130 grand into Railtown. You have 375,000 shares. Well, that means let me use a different color. You've got to add that 400 and the 130 to come up with your break even, because you established a new position. I mean, this is rough. So you take 400 and 130, and it's 530. So you take 530,000 in losses plus commitment. You divide it by 375,000 shares of Railtown, and you need the stock to go to $1.41 a little over $1.41 per share to break even. $1.41. And you make back your 400, you're break even on your all of it at $1.41. Now, Ricky alluded to it, but we can get to a valuation of Railtown two different ways with information and projections we have now. One of them is Langchain. Last year, raised $25 million through private equity with a post-money valuation of $1.25 billion on projected revenues annually at a loss. So they raised money. Langchain is the closest competitor that is publicly spoken about. I think it's a lesser product. I think Railtown is in a superior category, but it's what we've got, one thing we've got to work on. Well, the projections at the time is they do between 12 and 16 million in annual recurring revenue, and they're operating at a loss, and the money is raised to build out their tools. Railtown's already built out. Of course, they'll keep improving. But if we use the 1.25 billion, which was the valuation of Langchain over the summer, although it closed September / it was October, and early October they announced it. If we use that 1.25 billion again of last year as the comparable, and we use the fully diluted shares of Railtown, we come up with $5.50 as a target, and I'm not going to say it's going to happen overnight, but it could, just to match Langchain's last year valuation. Langchain now is probably worth 2 or 3 times this. I don't know that, but it's such a hot area of the AI market. Well, I'm not coming up with that value. These big funds came up with that value, $5.50 a share. Well, so if Railtown does go to $5.50 a share in a catch-up move, and that's last year's valuation, and that I think is just the starting point. You turn your account into $2 million, and I don't think you should sell. Now, we have to follow all the news. There's no absolutes, but I don't believe you should sell at $5.50. You turn your account into a $2 million account, and that should excite you. Instead of feeling like a victim at the hands of all this criminality and heaviness, you've taken action and you've turned your account into $2 million. You're in the green. I can't imagine you've lost $2 million. But that's the starting point. What I think is going to happen from 550 is it's going to go to $11. So your account's 4 million. And I think from there, I didn't want to go to 22. I wanted to go to 15. But if it goes to 22, your account's 8 million bucks. There, to me, there's, I don't even know why you hesitate. I would run, sell, and buy. And I'd do that tomorrow. And if you want to stretch it out over the next 5 days, that makes sense. But I'd personally do it tomorrow. Now, let me show you something about that. Let's say I wouldn't do it at 550. So I'm going to say it goes to 11, okay? Let's say the stock goes to 11 over the next few months. And you keep all of your shares. So your account's worth $4,125,000. Now, at that point, let's say for some reason, fingers $5, and you feel like you just need to be in it. Well, to get 60,000 shares, which is my example that you already have, at $5, it's going to cost you $300,000. Right now, in my example, that's half of your account. But if Finger does 5x from here, and it's half of your account now, if Railtown does what I think it's going to do, you could sell a little bit or do it on margin, which I'm against since we're coming up to a big market sell-off. It's 7% of your account, even at $5. So I would just murder the alternative. Don't even look, even if it goes up, because my degree of confidence that $11 is coming on Railtown is 90%. Now, I can't tell you exactly when. All right, let me show you something else. Another way of coming up with a valuation, Will. The AIP partners, I'm not gonna break it down in elaborate arithmetic, but AIP Partners was purchased by Railtown last year, and it's one of the reasons the stock has been under suppression of price. I don't want to go back through that whole story, but the automatic selling by the criminals happens whenever small companies announce a merger, an LOU, an MOU. They need money. They hire Canaccord Genuity. It's the whole litany. Well, AIP is 200 companies approximately doing 500 million in annual revenue. Railtown owns the network. Currently, all of that AI service product that those companies generate, they sell AI services. They're all hosted at other hyperscalers. Well, Railtown's going to move that, and that's by belief and by information and by interviews that are in the public market. Railtown's going to move that 500 million over to the Rimouski data center, which is Telus's sovereign AI data center that is green and is 40% of the cost of any competing data center, and it houses the best NVIDIA chips. And Canada is on a campaign through all aspects of their society to build Canadian AI sovereign compute and IP and end product. They don't want to just sell the raw material. They want to sell the end product as well. And that's Canada. Well, Railtown has a revenue split agreement with TELUS. Now, we don't know it. And it may or may not ever become public to the public, but analysts will be able to figure it out. I think it's going to be, I don't know. I think it's going to be somewhere between 15 and 30%. I don't think it'll be 10% because why bother? I don't think it's going to be higher than 30% because TELUS probably has other people they're doing deals with, but it could be 30%. I don't know. So I use 20%. 500 million in annual revenue transferring over to, sorry, not 500 million. That's the gross. I would say the hosting fees probably by 2 years from now, this won't be 500 million. It will be closer to 600, 700, 800 million. So I'm going to say it's the hosting fees will be 250 million in 2028 or in 2029. 250 million. I think Railtown will get 20% of that. That's 50 million. ARR from Rimouski, year in and year out, just from Railtown transferring the network that it already owns, having the members of the network transfer to Rimouski, Railtown will get, in my estimation, 20% of 250 million in 2028 or 2029, and it will continue year in and year out as far as the eye can see, and it will grow. This calculation will be made now by analysts, and it will be discounted to now by analysts, and it will be given a multiple now by analysts. They control that. We know that. Now, the other thing is, I believe Railtown's going to be on the top of the stack at the Rimouski data center, proof of concept, NVIDIA, the whole thing. And I also think there'll be a 20% split. It could be 15, it could be 25, it could be 30, it could be, 17.1789235. I don't know, but I'm using 20%. You can adjust it. Darren Entwistle, 2 earnings calls, the CEO of TELUS, the first earnings call, third quarter, he actually mentioned Railtown. Second earnings call, fourth quarter, he didn't. But both times he said that TELUS is goal by 2028, is to generate $2 billion from AI-enabled technologies. I don't know what the hell technologies TELUS has outside of its data center and its data center stack. Now, fair enough, there might be tools in that stack that get their own dedicated revenue. But I don't think outside of their data center, TELUS is an AI company. Or their transmission lines, that kind of thing, those kind of services. So if you, instead of taking 2 billion, you just take 1 billion, and you multiply it by 20%. That gives in 2028/2029, 200 million in revenue to Railtown. Both of these are at 100%. So the revenue is net revenue, it's cash flow, it's profit. It gives, just from those two sources, 250 million annualized cash flow at 100% margin, and going on and growing for as far as the eye can see. Now, the analysts will discount that to today, and they'll give a value to it. What can we do? What can we do that makes it simple? What we can do that makes it simple is we can take the 250 million annualized and we can divide it by Railtown's fully diluted share position. And we can come up with a revenue per share, a profit per share, a cash flow per share for Railtown in 2028 or in 2029, growing and going forward. We can come up with $1.10 in annual recurring revenue in 2028 or 2029 at 100% margin, $1.10 per share for Railtown from those two sources. We know about one for sure. The other one, it could be based on the whole 2 billion, and the 2 billion can grow. The other one, we're not sure exactly the split, but we do know Railtown's on that stack. And we do know they're going to revenue share. So we do our best. Let's not use the $1.10. Let's just haircut it slightly. And we'll say it's $1 a share. $1 a share in 2028, 29, and going onward, $1 a share. Well, what are the multiples, Will, right now? Software as a solution is getting crushed because all SDKs, all applications, for example, on your phone or on your computer, were created with software developers toolkits, SDKs, software development toolkits. Every one of those has to be upgraded or replaced with AI developer kits, ADKs. All of it has to be replaced. It's the largest industry on the planet. And it's happening. It's happening. So the SDK multiple, more the SaaS multiple, it might be as low as 5x, 7x, 12x, something in that range. But this is AI. This is the new frontier. And this is 100% margin, and it's growing. So you have the other comp that you have on multiples is the length chain multiple. Midpoint, that was 85x. Right in the heart of it, the ADK, the AI, but this is more orchestration. It's got a lot of different names. But this orchestration layer there's a whole range, and I'm going to write down the midpoints here. I think the software as a solution model, because of the margin, I think it gives you 3 targets, Will, just based on these 2 sources of revenue. I think it gives you 3 targets. The baby bear target is $12. The mama bear target is $35. And I'm not saying instantaneous. This is not a hot stock. This is not a breathless trading stock. This is an investment. And the Papa Bear target is $85. My target is $55, but $85. That's from 2. Let me just give you one other thing to dream on. And I do it now every morning, and I don't know where to stop myself because I'm only talking with myself. But if that one data center, admittedly, the AIP part of it is just a one-off. So if that one data center, the TELUS data center, gives Railtown 200 million in ARR, that's just the Ramuski. There's 12,000 data centers in the world. Microsoft has 400. Bell Canada has data centers. Rogers Communications has data centers. Europe has a sovereignty issue. Korea, Japan, I don't know, India have sovereign, all of the Middle East sovereignty issues. So I just start thinking, you've got what, 4 different geographic areas in the world, maybe 5, that would be interested here. How hard is it to imagine data center 2, data center 3, data center 4, data center 5, data center 6? By the end of the decade. How hard is it to imagine that if the proof of concept works there times 6 data centers in total doing that? All of a sudden, you're at 1.2 billion. And this, I know this sounds crazy on a 35-cent stock, but all of a sudden you're at 100% ARR at $1.2 billion. Put it a different way. You're making $100 million a month in cash flow and profit. This is Railtown, Will. I'm not saying this is going to happen, but I can't help my mind wandering. I just can't. And that's just 6 data centers worldwide. Now, there's proof of concept. There's things that have to happen. So let's get to the first parts. But as I just showed you, if you put all your money in, I think you just have to get to $1.42, $1.50, call it, to break even on your whole account. That's going to happen in a heartbeat. I just can't tell you when. Anyway, well, that's my reaction. I think you're one of the luckiest guys in the world, because all of the angels and the friends and family that invested with Marwan and Corey 6, 7 years ago, they've had to wait 6, 7 years. All of the big whales and the big movers and shakers that invested in Railtown publicly and privately, they've had to wait years. This group of people, for essentially a year, a little bit longer in some cases, a year and a half, they paid 40 cents, 50 cents. And they had to wait all this time and go through the pain of it. It's been painful. But you will, and I don't begrudge it. I envy it in a positive way, not with any jealousy. I just wish I could do it. But you get a chance to buy a massive position in Railtown, and you're not going to have to wait. It might be 90 more days. I don't know. It's not going to be much longer. So anyway, Will, that's my answer. I'm willing to answer more questions, but I think Railtown has to quote Ward's words, has a disruptive technology. And I think I'm willing to say that what is going to make the TELUS data center really pop, really hum, is the Railtown technology. We'll find out. I mean, Google has Google ADK. Amazon's trying to come up with something. There's a series of competitors, but Railtown's done a heavy lift for 2 or 3 years. They're embedded in everything Microsoft, and I'm not sure you're ever going to have to sell your stock, because I think you might find out that Microsoft has bought the company, or IBM has bought the company, or Oracle has bought the company, or TELUS has bought the company. And then you're in a blue chip stock. Anyway, that's my long answer. But I would just be, I couldn't wait for the market to open tomorrow to do it. Will Underdown. That would give me almost 420,000 shares. That's even better. I came up with a lower number. I would do it in a heartbeat. I would do it in a heartbeat. And I've given you my thoughts. You might miss 1 or 2 of those stocks having a short squeeze because some powerful people manipulate it, but that's all it'll be, is a short squeeze. And sure, if you caught one of them, you make a lot of money if you get out. And a lot of the squeezes happen before the public gets a chance to get out. I don't know. It's gambling versus investing. And Railtown is one of these rare instances where you know something, if you believe the story, and you can act. The big players who know the story, they can't act because they know material, non-public information. Now, there's skeptics out there that say, oh, they would buy it anyway if they knew. Well, maybe that's true. I'm not so sure up in Canada. But the other thing is that when you're running a big fund or a small fund or a family office, or your account is with one of the bulge brackets brokerage firms, they're not going to let you buy a stock under $5. It's just automatic. It's a waste of time. So there's some inefficiency, massive inefficiency. There's also a whole swath of people out there that don't know the Railtown story. And when they know, and if they can buy at that time, you're going to be surfing that wave, and it's going to be a wave that never hits the beach for a long time. I don't think it ever will. So anyway, you're just sitting, you have before you will, if you act, you have the way to become your own savior, your own agent of your financial system. You no longer have to be a victim. You can be powerful. You got to take a deep breath, sell all the crap, buy Railtown. If one of the others works briefly, I mean, you'll have a chance to come back to it. Of all of them, I think Finger looks like it might have one of its patented rallies, but I don't know if it's going to go to 2 or 5. I don't know. Or it might not happen at all. They have to raise money. And there's going to be, if they have to raise money, there'll be a reverse split. So it's a gamble. It might work out. Gambles sometimes do. I don't see Railtown as a gamble at all. You're buying it flat on its ass. And, you know, you're buying a ugly duckling that's going to become a swan. Anyway, I would do it. I would just take a deep breath. I'd do it tomorrow morning or do it during the day, spread it out across the day. But I would do it. I would pay any cost, bear any burden, and do it. Ricky Brogan, so TELUS used to be owned by the Canadian government. I don't know about that, but I wouldn't be surprised. Canada is basically a socialist thing, I think. Was TELUS ever owned by the government? I don't know why it matters, but yes, TELUS was originally owned by the government. It was formed out of Alberta Government Telephones, a provincial crown corporation that operated from 1906 to 1990. If you remember, that's when Judge Green broke up AT&T, approximately. The Alberta government privatized AGT in 1990, creating TELUS Corporation, and then divested its remaining shares by 1991. Jason Harbison, TELUS News Today. TELUS and LSpark officially launched the Sovereign AI Accelerator. Well, it's important, and it shows you the power behind AI. I think it shows you the power behind TELUS Digital and TELUS data centers. It shows the reach of I have it here. I don't want to open it because I'll lose the comments, but I saved that article to talk about it today, but I can just find it here. It's not the only news today. Albion and Technotree partner to deliver next generation VAS platform for TELUS in North America. That was announced. Powerfleet launches advanced AI video software as a solution with TELUS, amplifying American growth. These are both big, and these, I believe, clicking away or synapsing away for all of it will be Railtown. Now I got to find the one with L-Spark. It's not showing up. I had it. Well, let me just ask that directly. Okay, so they're going to launch, as you say, the Sovereign AI Accelerator. It's a program to give money to Canadian startups. Sorry, it's not money. To give compute to Canadian startups. So it's going to give access to this. This is the beginning of opening this sovereign AI factory for business. And it's with the help of the government. So with the help here of this partnership. The goal is to help Canadian startups develop, train, and deploy AI solutions while keeping data, intellectual property, and competitive advantages within Canada. It's a bunch of critical fields. It's powered by NVIDIA, this factory, and 99% renewable energy. You will get 6 months of hands-on, one-on-one advisory support from L-Spark. The first group of companies are Airy 3D, Codalio, Edge Signal, Patabid, and TopoLift. This initiative aims to level the playing field, providing small and medium-sized enterprises with enterprise-grade infrastructure. And where? On the TELUS data center. And who splits the revenue? Railtown. I think it's huge news. And it might be the beginning of the turning on of the TELUS data center to the broader, bigger markets. I think it's great news. Thank you, Jason. E. Belanger, Bob S., you'll catch up with me soon. It's time I added more shares. Yes, sir. Jason Harbison, Airy 3D, Codalio, Edge Signal, Patabid, and TopoLift are the first companies. I think it's great that you called it. You got it. Bob S., go for it, Eric. Great positions we all have here, except for me. But I'm not complaining. I'm happy for each of you. Jason Harbison, Amazing Bob, Ricky Brogan. Yes, we found the needle in the haystack with Railtown and buying it as a private company in the seed round, as if it were a private company in the seed round. Thank you to William for sharing this gem. Well, it's not just me. I've been sludging it out, but it's not just me. The idea was suggested to me by somebody else, and I have to give him credit, but I can't. So this is my way of giving him credit, but I can't do it. So it's not me, though. But I think there's been sparks along the way that I responded to. I listened. I used to be a member of his services. I listened to a pitch many times. It's hard to do, of James Alturer, and that fired me up on AI 2.0, as he calls it. A friend of mine at my old office sent me, I mean, he was sending it to a bunch of people, but he sent me uh, uh, Morgan Stanley's research analysts on what was called AI for everybody, AI for everything on robotics. And I went, a couple of things. I went, my gosh, this is huge. And then I said to myself, and I've said it to everybody, that Wall Street is training their brokers, their wealth advisors about AI because they're going to raise a lot of capital and put it in AI. So that just opened me up. And then I couldn't stand it. I had to come out June 5th. And I moved my poultry account. I moved everything into Railtown Thursday, June 5th, or Thursday, June 4th, or Thursday, June 6th, right around there. And I've been talking about it ever since. But I don't take credit. Ward has helped me. You guys have helped me. Other people. There's a lot of research out there. But most of all of you guys have come together, and girls, and supported each other, and you've had the courage to invest, and you've hung in. I think the thanks should go to each of you. Steve, hi Uncle Bill and IRT investors. Hi Steve, Ricky Brogan. So Keith, that's if he's in a taxable account. Yes, sir. Yes, sir. If you're not in a taxable account, doesn't mean anything. You're right about that. Ricky Brogan. So when Corey met Marwan, they both basically had the same idea that there were going to be problems in AI. I guess Conductor was the first thing they started. No, I don't think that's how it happened. Corey has been in and around software since the PC, since the 80s. Marwan, I think, is a little younger, but basically same idea. They both worked with, developed. Corey's a little bit more on the finance side, but he's a software guy too. They've built teams, they've built software companies, and they know from their experience some of the sore points in software development. One of them is when there's a bug or there's a virus and the whole thing's about to crash. You have all hands on deck, alarms blaring. They got together and said, why don't we fix that? Nobody else has fixed it. Why don't we do it? And then one of them, I don't know which, said, well, why don't we, instead of fixing it for SDKs, for software, which we will do by default, why don't we be early and fix it for ADKs, for AI? Because they knew that there was, pardon the language, there was going to be a quantum leap in compute power, because it's the industry they're in. And they knew that what the industry was waiting for was the data centers and the chips that could handle essentially AI 2.0. AI 1.0 was gathering all the data, basically. AI 2.0 is making it useful and putting it into real world use cases, all manner. And as Altucher calls it, it's the biggest technological transformation in 150 years. I think he's talking about the rail engine. I'd talk about oil, but whatever. Or maybe he's talking about steam engine. I don't know what he's talking about. Happened 150 years ago. But he also says AI is going to create more wealth than crypto, and it's going to make crypto look like a blip. But so these guys said, why don't we be early and we'll be ready for what's coming around the corner? But you know what? They were too early. They had their own money. They had friends and family, and nobody knew anything about AI. I mean, vague. they were all crypto this, crypto that. Vague idea. Electric vehicles this, electric vehicles that. And then what happened? So they had to go public to raise money. And of course, they get crushed in the junior markets in Canada because the short sellers are more prolific than rats up there. They're everywhere. And then they needed money again. So they went on the over-the-counter market with the intention to raise money in the USA. Thank God they didn't. And in the meantime, ChatGPT hit the markets like Elvis Presley hit the radios. And all of a sudden, everybody knew about AI. All of a sudden, the path to financing, but the path to the story changed. Thank God they didn't raise money down here in the United States. But that's why they're public. So the stock is ignored by the private equity guys for now. And we have this opportunity, to, as Ricky points out, to come in at a seed round valuation or a Series A valuation while nobody's looking. But they were early on the AI story, and that's to our benefit. And that's their genius. I give them credit as genius. Keith, 375,000 shares-ish. Yeah, that's right. Keith, congratulations. Keith, we're still cash flow light, very light. Of course, Keith. What part of this story are you missing? What's part of it are you missing? Railtown, about 2 years ago, went out marketing itself, and they came up with approximately 1,200 users, one by one, word of mouth, conference after conference, Zoom call after Zoom call. They essentially have 1,200 users, and basically for free. And they have the model of going out, building your user base, one company of the kind, the LangChain model. And then LangChain caught fire when the private equity guys started propagandizing it, and apparently 30% of the blue chip companies, the Fortune 500, use LangChain. Well, all right, developers are using it, but developers will always go to the better solution. But why did it freeze at 1,000 to 1,200, Keith? Why do you think it froze? Can you use your noggin? While they were out selling it, commercializing it, pitching woo, they ran into AIP. They ran into AIP. AIP was founded by these four guys, Mike Nobrega, John Ruffalo, Patrick Horgan, and Dr. Tom Core. The idea of AIP, let's create a Constellation software type product, which they funded. Let's create a company like that so we can bring together the AI companies, the young startups in Canada. We can put them under one umbrella. We can, like Constellation Software, we'll let them run it, but we'll give them know-how, we'll give them capital, and we'll cross-sell. That was AIP. Well, Railtown ran into AIP as they were selling. They did it at the British Columbia AI After Dark conference in November of 2024. By Christmas time, New Year's, they were married. On February 11th, they announced that Railtown was going to buy AIP. That went into a quiet period. But you know what? That brought in an ecosystem of 200 companies doing 500 million in revenue to cross-sell and cross-platform. It's a quiet period. They don't talk about it. We don't know what revenue's going on for sure. But you're right. It's essentially zero. Now, I know, Keith, that if they signed any deals here and are doing revenue, they probably have to announce that. So one way to handle it, since they own AIP, is hold off. Let's just hold off. We've announced our strategy, but let's not kick it in until what? Until what, Keith? What? TELUS. They met TELUS, maybe through AIP. They met TELUS during the quiet period, which is ongoing, and they signed a revenue sharing agreement with TELUS. Now tell me, Keith, where should the revenue come out of this deal? Tell me when it should come out of this deal. I mean, it's idiotic to look for revenue out of the TELUS deal yet. Why? They finished Rail Engine in January of 26. They finished Rail Engine in February of 26. These are by filings. So how would they bloody do any revenue from TELUS before that? Why do you put bumper sticker pain in your brain? The whole story of Railtown changed when they met AIP. They no longer had to go customer to customer to customer. That group is 5,000 to 6,000 end users. They all of a sudden had an audience. But during that, it went to TELUS. You know what TELUS's audience is? I think it's something like 20 million hookups. I could be wrong. It might be 2 million. But it's an amazing number of users that TELUS has. But you know what, Keith? It took time to build the TELUS AI sovereign data center at Rimouski. They didn't start making revenue right away. And then they've been testing it with 4 or 5 big customers. I'm sure they're making revenue, but they're not at capacity, not at a long shot. They're not making revenue right away. Keith, what the hell are you talking about? TELUS is an on-off switch. And you want to see revenue before they turn it on. It's asking a lot. They no longer are focusing on one customer by one customer, although that's happening. Rail Tracks apparently started, it was in one of the posts, at one of the hackathons, one night they got 2,300 users. Revenue's happening now, my boy. Here's a data stack. Here's the data stack, Keith. To start generating revenue, you need all of it. Now, there's more than this. I'm being very simplistic. But at the bottom is your NVIDIA chips. And there's more than just this. Then there's your large language models, maybe Anthropic. And then there's your orchestration framework. This is where Railtown is. Then you have your users. You have to have it all set up before revenue can start. What do you think they should do, Keith? Just sign up some customers, have a shitty offering, and have Rail Engine not ready and do a little revenue so you can see some revenue so you can feel good and blow their whole wad? It doesn't make sense, Keith. I just showed you. What doesn't excite you about that, Keith? How do you confirm this by this kind of question? It's an on-off switch. Well, they're not showing any revenue yet. It's very light. Okay. You can look at that negatively and turn it down. On the other hand, if you have the vision to accept what TELUS has already announced and Railtown's already announced, and the magnitude of what that data center is going to do, and acknowledge that Railtown's on top of that data center. I mean, some of it's execution risks, no shit, but you're paying 35 cents. You know that the 50 million, 40 million, 60 million, 50 million is going to come from AIP. Put a multiple on that. 50 million times 15, say. But it doesn't show up yet. It's not ready. Just from at a 15 multiple, just from AIP, that gets you to $3 a share. By my arithmetic, 330. But they're not processing that revenue yet, Keith. That's the whole point. And why might they not? They have to get the NVIDIA stack working. They have to get FireIX, but maybe, just maybe, they have to get the Rail Engine integrated. Maybe, just maybe, there's a regulatory envelope around it. Maybe, just maybe, and almost certainly there's attorneys all up the yin-yang. But you want to see revenue. I don't know. I don't get this thinking. The way I see it, you go from light revenue visible. You go from light, very light. Cash flow is light, very light. You go from light revenue, it's zero for all practical purposes. You go from light revenue, the on-off switch comes to tell us at some point, to massive visible revenue. I'm not saying it's going to be massive revenue booked right away. You know what happens in that time frame? Maybe with a lag. The geniuses will say, hey, they got a lot of revenue. We should invest. But then the value per share is way up in the sky. Investing, Keith, is about predicting. And you're exactly right. The revenue is light. That's the whole story. The revenue is non-existent. But to prove up future massive revenue isn't going to help if you turn it from non-existent to a trickle, to a little whizzle, to a little bit of spray. It's not going to change anything, Keith. You can't take bumper sticker, rule of thumb, bullshit investment slogans that the guys give you. And I'm not making fun of you. I'm making fun of the people you listen to, that they give you on Twitter and all this other stuff. You're not going to make money. You're chasing the wrong tail. Anyway, Keith, I think it's great that you are thinking about and asking questions. I'm not, again, I just, it's sometimes I get mind numbed. Ricky Brogan, no, I was doing the math for William, lots of laugh. Ricky, bar chart has the 20-day average at 30.36, the purple line. I hope, mentioning charts, I hope you guys can recognize, and I'm not trying to, I'm just saying, I told you I thought it could go sideways to down starting this week. I don't know what I think now. I haven't looked at the chart. Ricky, I lost 135K on AMC alone. $35K on GTI. Yeah, that's a couple of comments on that. I think 77,000 shares is enough to recover. I'll try to figure it out on a different call. I think it's plenty. Secondly, you had a chance to make money in GTII. I had a chance to make money in GTII. But we got all caught up in a false narrative. And we didn't sell. Same with AMC. You know, so my point is not to criticize you. I'm hard on myself about it, but it's to remind you, if other short squeezes come along, that's the devil's temptation. You may or may not trade them to make money. So the whole goal of Railtown is to get us away from that throwing coins up against a brick wall surreptitiously down a blind alley. We want to get into a situation where we're making money and we don't piss it away that way anymore. But anyway, I think, Ricky, just if you paid 40 cents for 77,000 shares of Railtown, it's about 30 grand. So you've got 134,000 let's say you spent, plus 35. I don't know what else you lost. 35,000. So it's 169. Let's say you spent, I don't know, 41,000 on Railtown. So you've got to make 210. 210 divided by 77,000 shares is $2.72. You break even. And I would not sell at break even unless something changes. I would not sell at break even. And this is the gift that Railtown is presenting to all of us. I unfortunately can't, for the life of me, I can't take advantage. I've been working and working at getting some liquidity. I just can't take advantage of it. It's just not going to happen. But you guys have it. And you should act. You can be, instead of victims, you can be strong and powerful in your own account simply by buying enough Railtown to take advantage of what's coming. Now, here's what you don't know. Like Keith pointed out, there's no revenue right now. Okay, there's no revenue right now. There's no announcement yet from TELUS about turning the bloody effing thing on. But you do know they spent billions of dollars building the TELUS Rimouski, the first and only Canadian sovereign AI factory that provides 35 to 40% of the cost of any other data center in electricity. It's green. It has NVIDIA out, the best NVIDIA. And it has a great stack. They are going to build the stack that makes you feel like, as a customer, when you turn it on, you're driving a bloody Maserati. Until then, they're not going to turn it on. They're going to make sure it scales. And by the way, Railtown scales. For 1,200 customers that they currently have for free, and 2,300 they added a couple of weeks ago for free, they can scale to 10,000, to 100,000, to 1 million, to 10 million with no additional cost, marginal additional cost. And higher. Railtown is built to scale. So I think you did a great job, Ricky. I really do. Railtown isn't one of these stocks. It is not one of these stocks that when it goes up, all your value is going to disappear. GTII, it went up. I'm not talking about you, but I believed in the short story theme. I believed that Jeremy Fromner was going to take over as CEO. I now believe that Jeremy might have been in on the whole bloody thing. I don't know. He acted like it, dumber than a brick for a smart guy. But anyway, that's all whining for me. That's all whining and me talking about myself, whining and complaining about what happened. It's useless. The way out is to have a position that can make your money back and turn it green, and then you're paid for this painful education. And then hopefully we all have accounts. If I can convince you not to go chasing the doggerel of these other promoters, you've established yourself in a whole different category. So anyway, Ricky, I think it's brilliant that you built up 77,000 shares. I think you can make back that money at $3. And I think $3 can happen in a blink of an eye, or not. It may take, it may struggle to go up. We'll find out. Here comes the bumper sticker. and it's his opinion. Lockup wants you to know you have to scale out and make your initial dollars with some profit and let the rest ride, in his opinion. That's what day traders do. That's what hot hands do. Do you think Warren Buffett sold any of his Coca-Cola on the way up that way? Do you think, now, if you borrowed money to buy the stock, yes, you should do that. Or if you are getting divorced, yes, you should do something like that. But then you're not going to make any money. I disagree with lockup 100%. Because he doesn't know what the hell he's talking about. He doesn't know the story. He's telling you to take your original money off the table with a bit of profit, like a day trader. Well, if you want to be a day trader, be a day trader. Good luck. If, on the other hand, you want to be an investor in the burgeoning and the massive opportunity that is AI, and we have to be cognizant of the risks, calculate what the effing stock is valued at, and don't sell before it gets there. Why the hell? What idiotic? It's idiocy. Let's say lockup. I don't know. You discovered a Spanish galleon that had sunk, and it's full of golden coins. And you know from your research that down there is $40 million worth of coins. But instead, I mean, I can understand selling off stuff for, getting a partner to develop it if you don't have the capital. But instead of going after 40 million, no, I'm just going to sell it and I'll let some ride. You know what it's worth. Why would you sell? Just to fulfill a bumper sticker, in my opinion. You got to scale out. That's what Tony is going to tell you guys. And please don't do it. Please don't do it. Now, if the stock gets up into tens of dollars a share, it gets a little, look, let me put it differently. This idiot wants you to sell. He's not an idiot. The advice is idiotic. Where are you going to sell in this movement for 35 to 350 to 6? Where are you going to sell? Why are you going to sell? Because you no longer believe in the story? Because revenue is evident and money's coming in and now you don't believe in it? It's idiocy. What, you're going to sell off here at $2 and then participate with a little bit of the money up higher? Guys, I can't find another stock like this every day. There will be other opportunities. But you have a chance to do 20x on your money quickly, and this guy's going to tell you to peel off money on the way up. Everybody has their own financial situation. If you have debt or you have obligations, you got to handle it as need be. But if you can go 20x just by getting to the starting gate, you might be able to go, if you hold, somewhere between 20 and 100x in a buyout or in a standalone company. If it stands alone, it could go much higher than that. Why the hell would you scale out? Just the only reason you do it is because you don't know what the fuck you're talking about. Sorry for my language. Guys like this, I can't tell if he's a real person and he's just filled with idiotic advice or if he's a short. If he's a short, it pisses me off. But by the way, I'm not saying we shouldn't use money management. I'm not saying that we shouldn't be aware of risks out there. So, this is not a whole, we have to be adaptable. But I tell you, based on the information that's out there about AI and about the orchestration layer, Railtown, by the way, when I give a target of $55, it sounds unbelievable. And maybe it is. But if Railtown is the critical piece, did you just show, what's this idiot smoking? I just showed you 6 data centers. In theory, we don't know, but if one data center is 200 million 5 years from now, 6 could be 1.2 billion 5 years from now. And this idiot's going to tell you, you should sell some, in my humble opinion. And maybe he's not an idiot. Maybe he's just not thinking clearly. The 1.2 billion could project out to 10 billion. Do you know what the stock would be worth? Let me just look up a company. What's the company that that IBM bought? Confluent? Let me see if I can get. That guy might be I don't know. Lockup might be just giving you his honest opinion, and I shouldn't jump on him, but I'm so petrified that this bumper sticker crap advice, day trader advice, is going to convince you to sell out at a minimal profit. It's idiotic. This is not a day trader stock. This is not a stock that the stock price is going to evaporate. Like the other guy said, Keith said, it's very light on revenue. This stock has been destroyed by the shorts, destroyed by the heaviness, and it's flat on its ass because there's nothing there. When it turns on, it's on, mother. It's on. And it's not going to stop. Why would you lighten up? Anyway, all right. Confluent has annual revenue of 1.16 billion. And you know what IBM paid for Confluent? $11 billion. So we don't know what it's worth right now. All right, so I'm going to just pick Cohere. I don't know what they do, revenue and valuation. It's so asinine. Guys, it's going to drive me crazy if you listen to Tony. He's going to tell you, you got to take your original money off the table. What the hell? This is not GTII. This is not ZJYL. This is not AME. This is not a short squeeze play. All right, so Cohere has 240 million in revenue, and it's worth 7 billion. I just showed you logically how Railtown can get to projected 240 million in revenue, projected at 100%. All right, let's use both of those, 7 billion and 11 billion, and come up with what Railtown might be worth. And this guy's going to tell you to peel off your original money in his opinion. I don't know. I sometimes wonder about the future of America. Okay, at 7 billion, you know what your stock's worth roughly? $31 a share. That's what Cohere's trading, I guess, valued at, with 240 million in revenue. $31 a share. Why would you peel any of it off? What, to go because you have a great chance to go build a position in AME? You're going to load up on G-Bucks? What the hell? Now, if you have good ideas and you're diversified, I do think, by the way, let me show you something here to talk against myself. Because logically, if you take your up 20x here, you go 20x, that's a good move. But to go to 100x, it's only 5x more, right? So one reason to sell down here is if you have something else that's going to do better than 5x. I don't know of anything. And I certainly chasing the latest promoted stock is a guaranteed way. You might get lucky on one, but you're going to piss it away. That's gambling. It's an addiction. I'll set up, if you want, I'll set up a 12-step program for it. Hi, my name is Lockup, and I invested with Tony the Tiger, I invested with Dan Borders, and I invested with Frank Benedetto, and everyone says, hi, Lockup, welcome. Do you want to share your story? I'll set that up. All right, let's do 11 billion, which is the value that IBM paid for $1 billion in annual revenue. I think that's low. It's $48 a share. Why would you peel any off? $20x, by the way, 20x in this stock gets you to $7. $7. I think the most logical place where it might stall is somewhere between 15 and 21. So when I draw 20x, I think the easy money, so to speak, might be 30, 40x. Why would you sell? Anyway, everybody's do what you want to do. Ricky Brogan, 100%. Ricky Brogan, or we sell out to TELUS. I don't know if TELUS can afford 3 shares for every RT, but if TELUS did do even 1.5 shares, I think we might be interested. Why? Because TELUS, if it's got a plan to benefit from AI worldwide, you know, TELUS itself could then go from $13 or whatever it is to 100, you know. In other words, TELUS is a buyer that would give us a dividend, but TELUS conceptually could give us multiples of growth. I get a little confused how Microsoft or NVIDIA can give us more than maybe double or 5x. Maybe they can. But I think TELUS could still give you 10x on top of whatever we make. It's interesting. We'll think about it then. AI Partners just posted on LinkedIn. I'm sorry I get worked up. I just get so panicked that you're going to listen to this crap. Doesn't mean, though, that we shouldn't be reasonable. I can't get that news open, Ricky. It's making me sign up, and I don't feel like going through it. So, you guys, if you want to go to LinkedIn, AIP is posted something. Ricky Brogan, spring is the season of building, and across our network, we're already see ideas turn into scalable AI solutions. I agree. And by the way, I appreciate Keith's feedback. I appreciate lockups as well. I just don't want you guys listening to the day traders because their motive is to get your cash into one of their stocks. I would prefer, until you break your addiction, that you don't have cash. Unless you need it for something else, but not trading. Will Underdown, thank you very much. Thank you, Will. Thanks for your question. Sorry I went on so long. Ricky Brogan, still on just $22 a share. After $25 tax, I'd have 1.3 million. Yeah. Or if the company is bought out by IBM at $25 a share, pick a number, you'll have a dividend from IBM, which will be nice, and you don't have to pay taxes, and you can be in IBM. And if you need to build your roof, you could borrow against it and let the IBM dividend pay down. It'll be a losing thing because the borrowing price will be higher than the dividend probably, but it'll keep you stable, and you can build your roof. Or you can sell a little bit and just build your roof. But you do not have to turn Railtown to cash just to have cash. In fact, the US dollar might not, every measure you get of the US dollar, it's always down 95% in purchasing power. And it'll go down another 95%. But we're trained that cash is king. I think silver is going to be king. I think gold is going to be king. I think income off of oil and gas is going to be king. I think owning a restaurant that you know how to run is going to be king. I think owning an apple orchard that you can eat from and sell and barter with is going to be king. I think owning a construction company is going to be king. I think being able to build the highways is going to be king. I think being able to do plumbing is going to be king. Having cash in your bank account is going to be a knave. It's going to be a knave. It's going to be a pawn. You're going to be a pawn. At least in the next cycle. Ricky Brogan, Will Underdown, you would, before tax, with $420,000, $9 million. Yeah. And going back to now, who I'm going to be jealous of, Will Underdown. If Ricky's correct, and let's say IBM bought Railtown at $25 a share, IBM is currently trading at $233, and IBM pays $6.76 as a dividend. So if Will had 400,000 shares of Railtown, well, first we got to figure out the ratio. So if IBM paid $25 a share in stock, we'd get $9. We get 9.32 shares of IBM. So if Will had 400,000 shares of Railtown, and if this magical thing happened, I'm not saying it will, Will would end up with 42,918 shares of IBM without having to pay tax. It's like your house. As it goes up in value, you don't pay tax. When you sell it, you do. But you don't have to. Because here, guess what? You're going to get $2.97. No, sorry. Wrong. $6.97 a share times 6.97. Is that what it was? So you're going to get, Will would be getting $300,000 a month, approximately, in IBM dividend, a year in IBM dividends. And per month, he'd get 25 grand in IBM dividends. So if Will were to buy 400,000 Railtown, and IBM bought Railtown for stock at $25 a share, and ceteris paribus on IBM's price, etc. The dividend, I think I said 697. Let's make sure. Oh, well, 676. All right, so I'm slightly off. All of a sudden, this portfolio of NAGs that Will has, maybe IBM buys it before the end of the year. Will, I'm fantasizing now. This is not a promise. But you, all of a sudden, you have an account that's giving you 25 grand a month in a blue chip stock. And you can sell calls and buy puts to protect the account, and you don't have to pay taxes on it. And you don't ever have to spend those nights sick to your stomach again. And you're not a victim. That's the big thing. You're not a victim. Uh-oh, Jordan Peterson. Oh, I'm just so sad. I can't read it, but he's in overwhelming pain. For those of you who hate Trump and don't have a passport yet, when you get your passport, it's going to have a picture of Trump. He's so, everything's Trump. Ricky Brogan, anyone else here catch what their stock could be worth at certain prices? Yes, I think everybody does that. Now, you should indulge in that. I think you should indulge in thought experiments about what revenue potential Railtown has. What are the multiples? That's one thing. You should indulge in comps. You should indulge in thinking, what if Railtown is bought out? Because there is an arms race going on. Everybody's buying everybody. You should think about those things. But you should also accept that it's all fantasy until it happens. But I think it's better to do that with a pad of paper, a yellow pad, and a cup of coffee than trading back and forth in loser stocks that might, just might, squeeze. Now, look, professionals can do it. There are professional people, and Ham can do it. I mean, Ham can trade these stocks. And if you listen to him, you can make some money. But why not turn, like using Will as an example again? What if that account turned into 40,000 shares of IBM, making 25 grand a month? Well, if you wanted to trade some of those stocks, you could put 10 grand in it. Wouldn't change your life. Now, if you put 10 grand in, you can't sleep at night. Pat M, I try not to poke at it too much. I've been disappointed too many times. AMC GTI. Yeah, that's a good point too. I used to do that for myself. What would I do? How would I allocate? You know, when GTII, and I had I was going to lay I actually had orders in. I think my lowest, I was going to sell at $21. It might have been 15, but I had layers going all the way up. Just didn't reach those numbers. But yeah, you're right, Pat. It's deflating when you write all that down and then it all turns to dust. But I think one of the reasons I would do it with Railtown is just to keep you in the game during this last year. It's just to keep you from not listening to bumper sticker advice. But Pat, I do agree with you. It's stressful when it all turns to shit. But I don't think Railtown's one of those stocks. And it's hard for each of us to realize that. AMC is basically, you know, I guess movies are coming back, but have you been to a movie lately? I went to one. It's amazing how bad they are. And I don't think it's a good model, but it's not an exceptional model anyway. And it was a short squeeze. Nothing extraordinary. GTII was always a piece of shit, but man, it had some good. People were trying to make it run. I think Jeremy could have done something, but like I say, he was friends with Jeff Easton, so who knows what went on there. I mean, Jeff Easton's 4 hedge funds, one of them could have called up Jeremy and said, you know what, we'll take care of you. Who knows? I'm not accusing. I'm just saying it's possible. Certainly his actions afterwards destroyed not only our wealth, but his as well. So I get what you're saying, Pat, but I really want people to buy into Railtown, know the story, get committed to its working out, because that's the only way. You're not going to be seduced to make a mistake. I'm telling you, if you sell listening to this guy and you take your money out, I don't know, at $2, the damn thing could go to 6 in a week and then be at 12, and you're never going to have a chance to get back in. That's the kind of trajectory Railtown could be on. So I just don't want you to do it. I just don't want you to be seduced into idiotic advice. And the only way is to get bought into what it could be worth. Get bought into what the story is. And then you won't be so easy to swayed into selling. Ricky Brogan, we have already bought our ticket to the game. Let Wall Street scam me for tickets at $6 to $8 above the moon. Fair enough. Ricky, wow. John Ruffalo is the founder of Mavericks and Omers. No, not Omers. He worked at Omers, the Ontario Municipal Employees Retirement System. Mike Norbrega was the president, maybe CEO, but president of it. But what Ruffalo founded was Omers Ventures. a division of Omer's. He founded that and he ran it. And yes, John Ruffalo founded Mavericks, and he raised, I think, $500 million each fund. He has Mavericks too. I think they're both about $500 million. He got hit by a truck while he was biking, and the Mavericks won. He closed out of his hospital bed. Jason Harbison, these LSpark companies may be future candidates to come in AIP. I didn't look. They might already, so one or two of them might already be in there. But pay attention, Jason, and the gentleman, was it you that brought it up? Because Canada, I ridicule certain aspects of the kind of the do-gooder socialism side of the corporate world in Canada. But on the other hand, the Canadian government, Canadian think tanks, Canadian universities, Canadian financiers, Canadian engineers, and Canadian provinces and the telecoms are all working together to make sure that Canada uses its energy resources, which it has more than it needs, alongside of building its AI raw material. But rather than sell that raw material to the developed world, they want to keep, and they are developed, but I'm using the analogy of a third world nations selling resources. They want to keep the resources in Canada and create the end product and sell the end product like they are a first world country, which of course they are. But they want to keep it all in-house. So pay attention to this LSpark tie-up. They're all going to work together to help make Canada a superpower in AI, and maybe a superpower in energy, and maybe a superpower economically, rivaling their lower below the border partner. We are not doing this. We're out wreaking havoc in the world because 5 million people asked us to. Well, I don't think all of them. Their leaders asked us to. Ricky Brogan, that's why we can buy in the 30s. If it were cash flow heavy, that's exactly right. There you go. Ricky, William has the foresight of what will happen and breaks it down. Very educational. Hang on, Keith. Well, I mean, I have to emphasize, this is how I see it. I think I've sussed out all the risks, but we have to be ever alert. We have to be ever alert. Rick, I was listening to Lou at the time, and he said he wasn't going to shave until the stock was at 100. Yeah, I liked Lou, and I also think Lou was trying to educate people. I also think Lou, my opinion, is Lou did have some access to some information. However, when he did that medical company, he must have gotten a big payoff. Or maybe not. Maybe he believed what he was doing. But the traders on that were making so much money. Oh my gosh, they were printing money. They were printing money. So I don't know. I get confused. I don't think he was working with the shorts, but I wouldn't put it past a group, a face that pretended to be a financial group or a CEO, to give him some compensation. It happens all the time. It's perfectly normal. But if you don't have the judgment, you might then be telling a story that helps the shorts and hurts people. And even if you do have the judgment and know what you're doing, you can still lose money on ideas. So I don't, I liked Lou, and I think he was trying to help people. That's my opinion. I think he was trying to show people how to make money. And I think he made it interesting. He gave you things to think about. He even gave you little trading ideas while you waited. Because not half, probably 90% of investing is making it through the hell of waiting without touching your account. Ricky Brogan, 270. Thank you, William. Boy, gonna sell at break even. I plan on retiring off this one. I wouldn't sell at break even if that's your goal, but you know, all I can do is give you my strong, which I guess I'm doing it tonight, but give you my strong conviction, and then everybody's got to make their own decisions. It's not often. Look, I've made a lot of money in my career and had it evaporate too. So I'm aware of these concerns, and AI. Look, if the market crashes, let's say at the end of the year, after going up, the multiples on AI could go to, PE multiples in a bear market can be as low as 5 to 7 to 8 times earnings. Well, if Railtown is earning $1 a share and it goes to 7 times earnings, that's $7. So I think on a valuation basis, we have a lot of our risk ameliorated. Now, so if Railtown, let's say Railtown in a really nice move, let's say Railtown in July is $35 a share, but at the same time, the Dow has gone to 65, 70,000. That will be my warning sign that the market's about to crash. And it's going to be a tough decision because I think AI is going to be one of the leaders on the other side of that crash. But, that would be a situation where we'll just have to address it if it comes. But cash might be king at that point, but we're not there yet. So we'll just pay attention. Ricky, I don't know, but something fishy about Lou passing. He almost staged his death in this last video. Well, he might not be dead. He might not be dead. Or he was having a hard time dying. I think it's a hard thing for anybody to deal with. So I don't know. I didn't watch the last video. If he's still alive somewhere, I wish him the best. And I mean it sincerely. But if he's, I don't know. Do we have to get into that subject? I've prayed quite a few times for Lou. I think if he had any sins, they were at least offset by the fact that he was trying to help so many people. That's my view. Ricky Brogan, I'm at 74.8 now, but plan on buying more this week. And I should have over 77. Bravo. Keith, Ricky Brogan, nice. Congratulations. See, Keith's on your side. Keith's a friend of the community. Ricky Brogan, 3 rules crease. That's from Bob Clayton, the gentleman. You find a better story, you need the money, or the story changes. And remember, the story changes is both the micro and the macro. But you're right. Keith, estimated sales price 7 billion, shares outstanding 213, result 32.78. There you got it. I only expanded that 213. I went to 227 to account for employee options, and I think there's still some warrants out. But you're right. I mean, because the purchase price might be $7.5 billion. Could you imagine $32, Keith? Ricky, Keith, thank you. Keith, yes, only one reason to buy. Keith, if they sell the company, we do not have to worry about scaling out. Exactly. Although, if we are on the verge of a multi-generational correction, we might want to buy puts. We might want to. We got to play it by ear, because taxes are a huge consideration. Taxes are a big deal. But let's just kind of have a strategy that we focus on a little bit what's in front of us. But you got to try to think down the road too. Julius Quiam, will the run most likely be in May? Well, I think it's unlikely to happen in April. You never know which straw breaks the camel's back. I would guess it could be Thursday. Flippantly, I would tell you that it's going to run before I have a chance to do anything. But seriously, it feels like, now I haven't talked to anybody, but it feels like, we're probably at least 2 or 3 weeks away. Why do I feel like that? I guess just because it's quiet. Even if there's some quote unquote news, I think it'll take time for that to go through, the water cooler conversations, but it'll take time to go through the various research teams. So I still think I think it's probably always safe to say 2 or 3 weeks from now, just cautiously. But at any time, Julius, I really don't know what to tell you. You call it the run. This is not a hot trading stock in my judgment. There will be people that trade it and make a lot of money. But I think unless you are a professional, you run the risk of trading out and missing the move. I think it's foolish to try to trade it, but to each his own or her own. Again, Julius, I think that what changes this story is when what I call the quiet period. It's not an accurate name. If you look up quiet periods happen around earnings. But when the prohibition of buying ends, because a lot of people out there know material, non-public information, when that ends, that's one thing. When TELUS, I believe it's TELUS, it could be somebody else. When TELUS puts the pedal to the metal about getting customers, on its data center. That's huge. Also going on in parallel is Railtrack seems to be gaining some traction. If that caught fire, that would be huge. And then you get research and you get perhaps groups starting to buy the stock. Now, you call it a run. It could be a stop and start experience, a back and forth, 2 steps forward, 1 step back, 3 steps forward, 1.5 back, 4 steps forward, 3 back. It could be like that all the way to $5 or $6. Why? Because under $5, nobody on Wall Street pays attention. Nobody at Merrill Lynch, Morgan Stanley, A.G. Edwards, Prudential, Payne Weber, UBS, nobody will allow their clients to buy a stock under $5. They won't recommend stocks under $5. Institutions won't buy stocks under $5. Mutual funds won't buy stocks under $5. ETFs won't do it. Nobody does it in general. In general. So it could be no run. It could just be a stumble bum all the way up to $5 or $6. It could be a stumble bum to $10. But what's likely is once the stock gets above $5 or $6 on volume and the bid's there and it stays there and the story's out, all of a sudden you get potentially buying from the thundering herd of Merrill Lynch brokers. You get buying from the Merrill Lynch technology funds. You get buying from Milan asset management at Merrill Lynch. You get ETFs buying it. You get institutions out of Fidelity buying it. You get the index funds buying it. You get brokers recommending it. You get wealth advisors buying it. All of a sudden, you got buying all over the place. And the run that you're seeking, I think, starts at $5.50, $6, and it goes to 12 or 15. Now, Tony the Timid Tiger made fun of me for that. I said that a year ago. Well, of course, it hasn't happened yet, but we'll see if I'm right about that. But the run, as you call it, damn it, I hate those words, gets you being a day trader. It gets you being the hot hand. Guys, you don't have to sell this stock. But anyway, I think the run is, I understand your words, could happen from 35 cents and it starts from there. But I think the run will start when the bid is maybe $5.50 on a lot of volume and it's staying there. And maybe a week or so after that, or a couple of days after that, I think it goes to $12 or $15, potentially. And then, once the stock is 15, 20, 25, I'm less adamant that you can do whatever you want because you've already gotten. Let's use the extreme. Let's use an extreme. Let's say the stock goes to 35. We've already gotten 100x, and maybe it's going to go to 350. That's 10x. Well, you're not going to go wrong, doing something else if you want to, but you got to pay taxes. You got to make sure your alternative makes sense. And, I've had clients in my lifetime and in history. Warren Buffett's a classic case. If the company's doing well, there's no reason to sell. Just to meet a bumper sticker rule of thumb. I mean, rule of thumb, they used to, when you went into the men's room in high school, they used to ask you if you wanted a hit. I mean, if you listen to everybody, you go down the wrong path. But anyway, Ricky Brogan, are dividends short-term gains or long-term capital gains? Neither. Dividends are income, but there's an exemption. I don't remember. It's not very high. You get a certain exemption for dividends on your income tax, but they're income. They're income. There's a whole theory out there about incorporating that makes dividends it's double taxation because the company pays income tax and then you receive the dividend and you pay taxes on that. But no, they it's treated as income. It's not treated as it's dividend income, but it's not treated if you held the stock for a year, it's long-term income versus no, it's not that. It's not that. I let me look. Let me tell you. I think it's as low as $400. Dividend treatment. It's been so long since I've done any of this. IRS dividend treatment, qualified or ordinary, and they're taxed. Qualified dividends are taxed at lower capital gains rates, 0, 15, or 20. Ordinary dividends are taxed as regular income, which is what I told you. But I wonder what qualified. That's a Canadian term, but qualified dividends are taxed at 0 to 20%. Let's find out what that is. Ordinary, taxed at ordinary income tax, 10 to 37%. All right. Okay. So qualified is what I was talking about, the exemption. I see. That's how they describe it. So if you are single with income up to 49.5, all right. So let me ask that. Qualified dividend limit. It used to be a low limit, but maybe I'm wrong. I'm not an accountant. Federal tax limits for qualified dividends are based on your okay, we know it's on income. So if you're oh, that's interesting. Maybe there's no limit. Looks like if you make 49,450 or less, your dividends are taxed at 0. That just doesn't make sense to me. But if you make between 50 grand and 550 grand, basically, your dividends are taxed at 15%. It doesn't make sense to me. Let's read what Fidelity says. Certain dividends are taxed at lower rates. Qualified dividends are payments from companies to shareholders taxed at less than ordinary income. To be considered qualified, I don't know what qualified dividends are. It looks like if you hold a stock longer than 60 days, that's one definition. And it says qualified dividends are the same rates as long-term capital gains. I don't know what the F. I mean, reading this, it sounds like dividends are taxed at long-term capital to gains rates. But that doesn't make, I don't remember that. Ordinary dividends are those that don't meet the IRS criteria for qualified and are taxed at ordinary income. Maybe this all changed. Or maybe I just don't remember anything. Qualified dividends are the dividend payments that meet IRS rules to be taxed at the lower long-term capital gains rate instead of ordinary income. U.S. companies. So they're taxed at 0, 15, and 20%. The basic rule to be qualified, it must come from an eligible company, U.S. company. Yeah, some foreign. The holding period is more than 60 days during the 121-day window around the ex-dividend date. Some payments, like REITs, do not qualify. On Form 1099, ordinary dividends appear in Box 1A. Qualified dividends appear in Box 1B. A simple rule of thumb is that all qualified dividends are ordinary dividends, but not all ordinary dividends are qualified. That cleared that up. Ricky, I'll look into it. I'm not an accountant. If you want a better answer, call an accountant or marry one. Ricky, if they're short term, one could sell a few shares of long and reinvest the divvy. True, but let's address that. I'll look that up. Keith knows. Thank God somebody knows. Dividends are short term, regular income tax. That's how I always thought, Keith. But I don't know what this qualified is. Sell calls against your position, pays you income, taxable income without getting rid of your shares. This is highly advanced, and it's what big boys do. I agree with that, and it's a way of doing it, Keith. There's different strategies. What I've done, what I settle, I haven't done it in a long time, but when I had an account, what I would do, I would settle for the small premium of selling, 3 weeks out or 8 weeks out, because there was less chance of the stock going through the strike price and my stock being called. Others go further out for the bigger, juicier numbers. So one risk of selling calls, and it's happened to me and happened to my clients, is if a stock start going up, you buy back your calls at a loss because you don't want to sell your stock for tax reasons, and then you sell additional calls. But if it keeps going, it does it a couple, 2 or 3 times, all of a sudden you've got this ongoing deficit in your calls. But eventually the stock stabilizes and you can sell and work that back down. But it's a nightmare, and the investor gets very uncomfortable. But you can work your way through it. I like your idea, Keith. I think it's a great idea to sell calls and bring in income, particularly if we get into a blue chip stock. I love your idea. Keith, that's a great problem to have. Yes, I agree. Yes, chairs are so comfy you fall asleep. Ricky, thank you to Keith. Ricky, if IBM were to buy us out, I would reinvest the divvy every year and sell the amount to make up for the dividend. What do you think? Oh, to pay the taxes on the dividend? Yeah, you can join their dividend reinvestment program. If you want to hold it until you're 90, I like the reinvestment, but it takes a while to get out ahead, to have it really turn into wealth creation. But the law of compounding works in your favor. I just caution and I hope it doesn't happen soon, but I think the Dow at some point is going to have a melt up and go to 70,000. And I've been saying this, I had a slightly lower target, of course, but I've been saying this for 2 or 3 years. I've been thinking about it for longer than that, because you have these blow off tops at the end of bull markets when everybody is in. And I wouldn't want to be reinvesting then. But it won't matter. The sell-off will come so quickly. And the reinvestment, if you keep reinvesting, you'll be reinvesting at lower prices. So it's a good, I like dividend reinvestment. I think it's great. If it happened to me, I don't have the stock positions you guys have, darn it. But if it happened to me, I probably, because I'm going to try building other things, I would probably partially live off the dividend and ease up on my life. But it's a good strategy, Ricky, and it'll build a bigger portfolio. Keith, LSpark is Canada's leading business-to-business software as a solution accelerator, headquartered in Kanata, North Territory Park, Ottawa. Ah, that's interesting. I think that's where Dr. Tom Core is based. I think, by memory. That's a big thing. And Keith, I think there's more to that story potentially, and the implication of that story is very big. It shows to me that Canada is backing AI. Do we have similar efforts in the United States? It's all directed by these Wall Street banksters. I don't know. I think it's a huge thing, Keith. Since its founding in 2014, it has supported over 130 startups and witnessed 14 portfolio exits. Fantastic. Keith. Oh, you got that from AI. That's not cheating anymore. Ricky Brogan. I still remember Lou's cat Luna. He was funny. Yeah, cats are great. Keith. Warren is in the most amount of cash he's ever held, awaiting a huge correction. Well, he might be awaiting that, or he's awaiting an opportunity. And valuations, we've gotten so used. Look, the markets are mostly institutional now. We put all of our money in funds. Uh, uh, Wealth advisors are really nothing more than asset gatherers. That's what it was turning into before I left. We were just meant to become asset gatherers. Sometimes I wish I had done that and give the money to somebody else to manage, which sounded really boring. It sounded like being an insurance agent. But you gather the assets, you get a trail, you collect the trail, you collect the trail. When I left, I was wrong. There were 3% basically. It's changed, but that was the basic idea. Moving all of our assets into managed money, there was 3% to charge to the client. 1% went to the house, 1% went to the broker or the wealth advisor, and 1% went to the manager, whoever they were. They also had other fees that they would build in, and it depended on who it was. It could be anywhere from splitting 20% to 50% of the profits. But anyway, they're all different. There's gates and there's what do you call it? High water marks and all sorts of little calculations. But basically, if I put an investor in to manage money, I would get 1% to my production gross every year. The house would get 1%, and the manager would get 1%. And I didn't think that would last. I didn't think that 1% they would cut that down. But it turns out, I don't know what it is now, but it turns out over time, what got cut down was the manager's part got reduced from 1% because of the volume. And then the house didn't take as much, or it just stayed at 3%. I met a young, well, she's probably older now, a young woman at my old office, Morgan Stanley broker, over a cocktail hour. And she was grossing over $1 million, and it was her third year in business. It took me forever. And I don't know if I don't remember, but I was President's Club. I was top producer. But I said, how do you do that in 3 years? She says, well, I charge 3% to everybody. And she was young, and, whatever you say, men are drawn to young, attractive women. But anyway, she charged us. I said, how do you justify that? Because she didn't know anything. Well, you don't know how hard it is. It's hard work. I said, yeah, I know exactly. I used to do it. But we had to make our money with ideas and helping people rather than just charging a fee. But anyway, that's what Wall Street's become, is gathering of assets, and it's fee-based. And it's basically giving the money to managers. Those are the institutions. And so that is the market. If you think about it, the market is institutions pretty much. And it's hard. I see your point. The overall market might get overvalued, because everybody's following the same research and they all get into the same 6 or 7 stocks. But it's not always just a market. There's also other investments. I would argue, as I did for a long time, silver was and remains undervalued. I would argue, even though the miners are exploding upward, they're still undervalued. I think oil and gas is still cheap. I mean, there are places for Warren Buffett to put his money. Obviously, he doesn't, I'm not saying that I'm right, that right now there's any place, because obviously he doesn't see that. But my point is, you don't need a market correction for Warren to apply his money. However, I agree with you. I think a correction is coming. But I think it's going to be after a melt up. But that's that might be a delicate call. That might be too fine a call. We'll find out. If oil prices go above 250 and stay there, the market changes completely. Interest rates will probably, they'll go down first, but then with inflation, they'll go up. Multiples will contract. So, everything moves. Michael Saylor has one of those companies that pays 11%, and it's classified as ROC, return of capital, 0 taxes paid. This is Keith. He's saying not financial advice. So it's a return of capital until it isn't, right? You can't get more capital back than you invested. So I'm not an accountant, but if you're getting 11%, it would seem if you held that for 10 years, you're getting more than your capital back. But I don't know. I'm not a accountant. Ricky Brogan, Keith, thanks. Ricky Brogan, I may call HR Block, which I don't plan using them anymore. They've gone up again. Keith, some investors hold ROC paying stocks in a Roth. That's a good idea. Roth, you don't have to track the basis, and the tax bill at the end never triggers because all withdrawals from the account are tax-free anyway. Is that true of all Roths? Is that true of all withdrawals from a Roth? I thought it grew tax-free. I don't know. I don't want to look it up. I'll try to. Roths were just coming in as I went to London, and the part we focused on was the rollover. So maybe you're right in the rollover, but I think you can create a Roth from scratch with after-tax money. But I don't know. I'm not convinced that it all comes out tax-free. I don't know. You know. I don't. Ricky, the only stick I ever had with dividend was my 401k was LMT, but I reinvested. Yeah, it was retirement money, so that was a good thing to do. NGR, dividend reinvested since 2004, total return 14%. Not hard to take with a gas company. That's a good idea, Keith. That's a good job. Ricky, so if the market has a blow-off top like a pressure cooker, would you recommend scaling some? Probably. It's definitely a time to get out of, it's to rebalance. In other words, we don't have enough. I don't know your portfolio, but if you have things that are not going to, this is my opinion. If you have things that are not going to follow the broad concept of reshoring and commodities and energy and AI, and maybe, obviously things like um, uh, what we used to call the consumer staples, maybe medical. If you have some high flyers, uh, you probably get out. And then the question is, Ricky, and I don't know the answer, but the question is, will those Mag 7s correct? I think they will. Will they survive? I think they will, but they might consolidate. I don't think OpenAI is going to survive, but I could be wrong on that. But I'm not saying it's going to go to zero either. It just merges. But when the correction comes, it's going to be devastating. So yeah, I think you should raise cash. You should raise cash on the way up. And if it's a stock you don't want to sell, you should probably buy puts. But Ricky, there's no one blanket answer. But let me ask you something. If the Dow's going to go, let's say I'm right, the Dow goes to 70,000 in September, and it does it in a nearly vertical way, and everyone around you is talking about buying stocks, and everyone is getting, and everybody's making money, and you're making money. And I warn you that the market, that's a blow off top. Maybe it goes to 75,000. Maybe it only goes to 65,000. But I warn you that the market is going to drop 95%. I think I'm the only one saying that. I think David Hunter is saying 80% or 85%. But I think it's going to go to massive extremes. So the 70,000 goes down to 3,500. See, I even think the Dow could round trip all the way to 1,000, 1,500 in a spike. I think it's going to be devastating as the leverage is unwound. Everything will come down. However, I don't think it's the end of the world. I think and I'm obviously at an extreme. If it only went down 80%, the Dow will go to 15,000. I think it's too high, but whatever. It'll happen probably in the span of months. And there'll be, people won't believe it. They won't sell at first. It'll rally. They'll think the rally, you buy the dip and there'll be some run-ups and then they'll go down. And the last bit of it is just, it's going to be capitulation, where everybody just says, I'm sick of it. I'm out of the market. And somewhere in there, and this is the one hope for the US dollar, there is no international Federal Reserve, and there's unlikely to be one. So the US Federal Reserve will take the role of rescuing the entire world. And so will the US government. And so will governments around the world. And right now, I don't know what the debt is worldwide for governments. In the United States, we're at what, 33, $35 trillion? I would imagine that the United States, in the depth of a correction like that, will take our debt to 100 trillion. And I think the Fed itself could go to 20, 30, 40 trillion in debt. And if you're calculating, what does that do to the value of the dollar? For that matter, what does it do to the value of any financial asset? It's an interesting question. What does it do to houses? Well, it is an interesting question because most houses are valued like bonds. But if you're in one, you're going to be happy you're in your home. I'm not happy I'm not in one. But what does it do for land that you can own? What does it do for energy? What does it do for leases on, I don't know, on oil producing properties? What does it do for royalty rights on mining? What does it do for gold and silver? What does it do for all manner of things? It changes everything. But what choice will the Fed or the United States government have? And I think one more time, the world is going to believe the Fed and the US government. I think our spending will be on public projects. It'll be possibly universal income, as somebody said here. I doubt it'll be doing good around the world. It might be war. But the banks are going to do everything they can to play this out and own most of the assets of the world, I think. So this is why I keep preaching that we want to be our own central banks. That means own gold and silver, own the ETFs that are physical, own miners, there will be money made in the stock market. It'll just be new leadership. But I think some of the old leadership will survive. I think AI is the future. So do you sell in that? It's too hard to know. I think if you're selling calls, I think obviously you buy puts. That would be one of my strategies when we're up there, is to buy puts against the banks, particularly. But do the AI companies, does NVIDIA go from 5 trillion in value down? Sure. In a correction, it will. But does it go all the way down to $1 trillion or $500 billion? I guess maybe in some climactic sell-off, but it's going to continue making revenue. And the governments are going to spend and spend and spend and revenue. So there's no one blanket answer. I would use it as an opportunity. You're in the new leadership, not old leadership, and you'll be able to tell if companies are trading at 100 times earnings. Yeah, you got to sell them. Look, when it all collapses, PE. When I was in the business, PEs were 8, 7, 5. Now look where they are. Pizza rules. Still holding check-in weekly. Appreciate your time and info. Thank you. Good to see you here, Pizza Rules. I can't believe how much time is going by. Ricky, William, after RT, you should start your own fund. I would invest. Yes, I'll maybe we'll buy a fund together. Maybe we'll have assets, and when the market collapses, we'll go buy one of the funds. Who knows? Sorry, I got to get new pair of readers. Oh, your eyeglasses? Ricky, Warren makes his money on both ways as well. I don't know. I think Warren has benefited from things now over the last decades that we don't have access to. But when he started out, he just started out the same as any of us. But Warren has been in a bull market. The Dow was $600 or $700 to my memory, and it's now what, 42,000? You know, using Warren's strategies, which is to buy and hold, not day trade, and to study everything, the compounding of that money, it's going to be amazing. But then I think he's also benefited once he certainly as became bigger, for example, as having access to a lot of deals that of really good companies that nearly got destroyed in the 2008 financial crisis. He stayed away from the dot bombs, and you know, he sees transactions that are incredible. And I hope that if we get a pool of money together, I will see those transactions, and we'll have a team. Ricky Brogan, first stock Warren bought went down for a while. When it came back, he had a profit and he sold. Later, the stock really went up. That's why he buys the stocks and holds for a long time. Look, a lot of these lessons you just can't learn. I didn't until you do them. You just can't learn them. It's weird. You just can't. You have to live it. It has to become your lived truth. Keith, Roth monies pay out tax-free after 59 and a half years old. I don't know about that. Let me ask a follow-up. Are all Roth distributions after, I'm just going to say 60, tax free? I don't think so, but what you might be right. Not all Roth distributions after 60 are automatically tax free. For a Roth IRA, withdrawals of contributions are generally tax and penalty free at any age, but earnings are tax free only if the account, well, this fits your definition, Keith, only if the account has been open at least 5 years and you're age 59 and a half. Contributions come out first and are always tax-free because you already paid tax on the contributions. Earnings come out tax-free only when the distribution is qualified, which generally means that you're at least 59 and a half and you've had it for 5 years. The rule applies to Roth IRAs and not to Roth 401ks or other Roth accounts, which can have different distribution rules. I don't want to study it right now. I don't think if you put money into a Roth after tax money and it grows tax free and it meets the 5 years and you meet the age requirement, I don't think you can take it all out that next year tax free. Age 61 tax free. But I don't know. I don't see it here. I just am too tired to study it. I promise I'll look it up. And I promise I'll be truthful if I'm wrong. But I think there must be limits per year, and there must be some sort of tax on your gains. Over certain amount. I don't know. If not, it's a brilliant place to grow money. But let me look it up. Just too tired to do it right now. I think he named his company Berkshire. No, he bought an insurance company that was called Berkshire Hathaway. He bought it. He bought a furniture store. Oh, all right, the other way around. He bought a furniture store named Berkshire Hathaway. All right, got it wrong. He bought Berkshire Hathaway. He didn't come up with the name himself. Seasoned 5 years. You're right, Keith. You must know what you're doing. Ricky Brogan, so even Warren sold his baseball ticket for a bag of pop. It happens to everybody. Look, everybody learns their lessons. All right, I wanted to go through this. That took forever. Bloody took forever. I'm debating whether I want to do this. All right, it's 8 o'clock. I'll try it. I made a report for you guys using my computer. It's long. I think I'll save it. I think I'll save it for tomorrow. I wanted to talk to you, and I did a lot of prompting and ideas, but what I wanted to talk to you about is efficient markets, inefficient manias. I wanted to talk to you about how can it be that the market doesn't see the value in Railtown. Now, there's no computer that's going to help me come up with that. So I tried, and we'll talk about it tomorrow. It's just I'm tired. It's too late, and my main thesis with Railtown is if the market knew the story, the stock wouldn't be trading here. If the people that know the story who want to buy it could buy it, the stock wouldn't be trading here. And I think those two things are going to change. I don't know when, but they're going to change. And what I think a lot of you probably wonder is how can that be? How can it be? When you're brought up, you're told that the stock price tells you everything you need to know, and you just have to look at a chart and count this way and that way, and all of a sudden you're making money. You don't realize that markets are inefficient, particularly when there's no price discovery and when the heaviness destroys all prices. And then the SEC restricts what CEOs can tell you, which is probably fair enough, but they don't restrict the other side. It's all out of whack. So when Railtown and there are some leaps here you have to make. You have to connect 1 + 2 + 3 + 6 + 7 + 8 + 9. What's missing? You got to fill in some of the blanks. Is it going to be correct? Maybe, maybe not, but I think the confidence level should be approaching 85, 90, 95%. But it's not perfect. And certainly when you get into the trap of trying to call timing, it's near impossible. As we've seen, if lawyers are involved or regulators are involved, I have no reason to believe they are now, or if there's big contracts pending, or what if there's more business than they can say grace over and they want to lock down those things before they tell the world about it? We don't know any of these things. But once it starts, you're going to see that this market has been inefficient as it relates to Railtown. Or your alternative choice is that the market is inefficient when it's pricing Cohere, Confluent, Langchain, that Windrift. Those are your only two choices. The market is inefficient and wrong in this valuation of all things AI. And when IBM pays 11 billion, when Microsoft pays 40 billion, they're wrong. That's one of your choices. That those guys are wrong, girls are wrong. And the private equity is wrong. That's one of your choices. I think that's really a heavy lift to argue that all those transactions, all those valuations, the hundreds of billions of dollars going in there, that's wrong. But that's one of your choices. You can say they're wrong. And Railtown's right. The valuation, the bears on Railtown are correct. You say that. And maybe it's not a perfect offset because Railtown's just one small representation. But most of those companies were just little startups too. Some just 2-3 years ago. OpenClaw. Your other alternative is to say, you know what? Stocks under $5 in the United States are abused because Adina Friedman sucks. They're abused because Ann Wagner sucks. They're abused because Gary Gensler and all the SEC, whatever they're called, chairmen suck. It's because FINRA is corrupt, because Congress sucks, because the president doesn't give a shit, because the banks control everything, because Stevie Cohen and Ken Griffin and those guys are greedy beyond belief, and they cheat, in my judgment. But you might not believe that. You might think it's a perfect market. Okay, one reason is the heaviness. Another reason is nobody can buy those shares, the Merrill Lynch rules. Another reason is the company is under a material non-public information blackout. And it's gone on and on and on and on and on. First it was AIP, and then it's TELUS. But maybe it's more stuff. We happen to be in the hottest, biggest potential market in the world. Now, I'm not saying that. Others are talking about it. But it's changing, it's evolving, it's wild, wild west. That makes it risky. But I don't think anyone can deny how much money's going to it. And I ask you this. If the world hits a depression or a crash, where are governments going to spend their money? Schools? Hell no. Hospitals? Hell no. Roads and bridges? Maybe. On peace? They won't spend it on peace. On saving animals? No. On cleaning up Fukushima? No. You know where they'll spend it other than war? They'll spend it on AI. They'll spend it on data centers. They'll spend it in space. Why did Trump create Space Force? Anyway, I think you're going to find out that AI in general, you know, all these big companies, all these big $0 to $100 billion companies, that is real. And the price to go bankrupt valuation of Railtown is wrong. And I wanted to try to give you some thoughts on how that's possible. So we'll talk about that tomorrow. I'm just too tired. It's 8:06. Okay, Pat M. You can withdraw Roth contribution money without paying tax because you put in after-tax money. Yeah, but that's the contribution. I agree with that. But can you take out the profit? All right, let me ask that question. Can you? All right. All right. Can you take contributions out of a Roth IRA tax-free? Yes, contributions you put in a Roth IRA can generally be taken out anytime tax-free and penalty-free because you already paid tax on that money. What is not always tax-free is the earnings portion. Earnings are only tax-free if the withdrawal is qualified. So that's the 5-year 59 and a half. All right, let me see. Is there any situation? Oh, come on. Is there any situation with a Roth IRA or Roth 401k where the earnings distributions are taxed? And please ignore the 5-year and age rule. All right, let's see what happens. Looks like Keith is right, and you're right, Pat. They say qualified distributions are tax-free, but I can't get them to answer. Let me just say, so I can withdraw all of my contribution and earnings in 1 year if I am over, I'll just do 60 because I can't try 59 and a half, and the account is over 5 years. Tax free. Just doesn't make sense to me. Wow, I'm wrong. Brilliant. I learned something. Yes, for a Roth IRA, if you're over 59 and a half and the account has been open at least 5 years, you can generally withdraw both contributions and earnings in the same year tax-free. I'm gobsmacked. You can always withdraw contributions tax-free. That's amazing. What a great deal. So I learned something from Keith. I learned something from Pat. You've put in after-tax money. Yeah, that's right. So Ricky, Pat, can I move my 401k to a Roth? Yeah, you can. William and everyone listening, keep your eye on the stack. Unless it's your neighbor's wife, don't keep your eye there. William and everyone listening, keep your eye on the stack. The gains in your Roth IRA are taxable, and penalties for withdrawal prior to 59 and a half years old. I think penalty is 10% for early. Yeah, if you do it early. Can I not try to be an accountant right now? I want to go back to Ward's point. William and everyone, keep your eye on the stack. I agree. And I think we'll go on that stack and we'll look at Jensen's 5-layer cake. There's your stack. And I think everything in the blue netting, I think that's Railtown. A little bit of the energy and energy management, optimization of chips, infrastructure, models, applications. I think it is the key to making it work. So anyway, I think I'm going to leave it there. I'm bushed. So peace to each of you, and we'll catch you on the flip side.